Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is something new that I might do on Saturdays. Let's see, what did I call it? Coffee morning stream. I realized maybe I should call it morning coffee stream, but I was just thinking about, good morning GM and just kind of having a relaxing morning, enjoying a coffee and looking at some of the charts. And big inspiration for this comes from Unity Software and from some posts that the Bronx Viking has been posting on X. And so I just saw this one, I guess on Friday. Corporate wants you to find the difference between these two photos, of course, referring to the Office meme where I believe, is it Jenna Fisher's character? What's her Pam? They're the same. And so this is just a Unity software and SoFi straight algo mode. And so you can see Unity software on the left looks like it's a bull flag, and then SoFi on the right looks like it's a bull flag, but has actually broken out. So I just find these to be really interesting charts, nice comparison. And also, I don't know how you guys have been. I kind of feel like morale has been sucked out of me. I feel like, the market's just going to continue to go down as it's been going down for a while. But I think that's really kind of like a dip buying opportunity. I try to gauge my emotions, and what I'm feeling really down, I think it's the best opportunity. And so I've been feeling pretty down lately, and so this lines up with that. And seeing these bottoms here, wanting to lean into the darkness. But it's actually not going to get any darker. It's always darkest right before the dawn. So I think those are some cool charts. I definitely am going to be going over Unity in this stream because I did have this pretty nice post yesterday where I break down one of the Bronx Vikings posts. So I'll dive into this for kind of a video on Unity software. And so periodically during the stream, I will hide the chat just so I can focus on kind of like recording a video. I will then release that a clip of the analysis as a video later today. And so this just kind of serves as a 2-for-1 or maybe a 4-for-1. I can get a number of videos recorded while basically taking you guys through my thought process. And in addition to Unity and maybe exploring SoFi, I did put out a couple videos on Plug from this poll, but I also wanted to put out some videos on USAR, which is USA Rare Earth Incorporated. It's a rare earth mining company, I believe. Also Rivian Automotive, and then AMC. So I just wanted to do clips going over those, and but I will probably start with Unity, although I did get one comment from Kevin B in the chat asking if I can go over AQMS. So I don't believe I have, I do have it up here, Aqua Metals Incorporated. And so regarding this, so I don't know anything about this company, but generally any stocks, I think that now is not the time to just be going, oh, it's on sale, I'm going to buy it. Oh, it's on sale, I'm going to buy it. I think that it's the time in the market when, plans really need to be executed. So looking at a stock that I'm not too familiar with, that is trading around $1.50, I feel like this has a target for $1, sub $1 on it. So I don't plan on trading this. And I actually plan on trimming a lot of my positions, some of them at losses, just to be consolidating my portfolio so I can maneuver a little bit better. And I also just plan on trading, the UVIX, in all honesty, the volatility in the market. So but I'm going to take a sip of coffee because that's kind of the whole point of the stream. Take it relaxed, take it slow, enjoy the weekend. I hope you guys had off yesterday for Good Friday. I don't believe I usually have that off, but I did yesterday. So that was nice. I didn't really do too much Thursday night, but I was maybe a little bit hungover on Friday. So actually, to be honest, I fell asleep on the couch. So I Yeah, I just kind of had a rough Friday in that sense, but it's been productive, relaxing, long weekend so far. But anyways, cheers, coffee here. And yeah, so I'm just going to dive into AQMS, which is the Aqua Metals Incorporated. And let's just look over at the profile real quick. So, Aqua Metals Incorporated is engaged in the business of recycling metals. The company is reinventing metals recycling with its patented aqua refining technology. It provides sustainable recycling solution for materials strategic to energy, storage, and electric vehicle manufacturing supply chains. The company's aqua refining technology is a low emissions, closed loop recycling technology that replaces polluting furnaces and hazardous chemicals with electricity powered electroplating to recover valuable metals and materials from spent batteries. So I think that's actually a pretty cool technology, very cool. But that does not, I mean, it's like the thing that I find really funny about investing, it's like you learn so much about all of these incredible companies, these incredible businesses, but that doesn't mean just because you think that they're incredible, I think that this seems like a valuable company. It doesn't mean that it's going to go up. It could go down to zero. So it doesn't matter. And especially, with the volatility that we've been seeing, the massive pullbacks, I think this, yeah, I mean, hey, it looks like it had a 1 for 20 reverse split. So, I mean, this did strike me as being familiar. Do I actually have this on the DGen Ed list? Let's see. Yeah, I do. I have gone over it before. As you can see, there was this 1 for 20 reverse split. So all my lines down here are garbage. And this, I don't know that that's necessarily that useful anymore. So I'm just going to clear off all of my drawings. And I mean, just to be honest, what this looks like with this having a reverse split here, and have there been other reverse splits? Actually, if we go back 2 years in time, so that would be 2023 price. Yeah, so they haven't had so many reverse splits that there's a big concern in the price. Hey Horatio, what's up? Cheers, good morning to you. Yeah, I just thought I was thinking about last night. I kind of want to just put together some videos, but whenever I do like one video, it's record it. I don't really edit that much anymore just because it takes too much time, and I don't think people really mind that much. But yeah, I put a video together and then I have to make a thumbnail, all this stuff, upload it, and then it's like, okay, I'm exhausted after that. But then if I just record all this stuff during a stream and just kind of do a casual hangout, it can be a little bit easier to record videos. And yeah, I'm really excited about Unity software. I think there might be some sympathy plays with that, and also maybe that is a sympathy play with GameStop. But I think that could lead to AMC and the meme stocks moving, just like what happened last year, more or less. But that's tinfoil hat theory, so we'll have to see. Roaring Kitty has not confirmed anything yet. But yeah, so like looking at this, I mean, it's just had big downside move and it's been consolidating down here. What's been happening with the volume? Okay, volume's pretty flat, pretty dead. So I guess, a line in the sand. I don't know if this is like the ultimate line, but the 52-week low, which was hit on November 19th of 2024, was $1.33. So I think that's a level to be paying attention to. We were over here forming, let's see, I'll just draw a ray here. We were forming from that pivot point. We were forming higher lows, but we got rejected from it. And so I think that this trend line would probably act as resistance if we do bounce. So maybe let's see, I'll do it from the low there. Okay, so that's another line that we can look at. And while we were doing higher lows over here, but we broke below, we're still doing higher lows. The low over here was 142. So let's draw another trend line with that. And so now we kind of have this range, this window that we can work with. And, and I said, on the bigger picture, this looks like, downside move consolidation. Maybe that looks like a bear flag. But also, I mean, even within that downside consolidation, not able to break above these highs. So I guess what I would like to see is a close above this high when there's that bearish engulfing candle on, let's see, April 8th. And that was at a high of 172. So let's see. I would say that, if it's able to keep putting in higher, so I guess I need to put another horizontal line in here just at 142 right there. And so, we don't want to be hitting 142. So I might make that line red. Actually, no, let's make that orange, kind of getting into caution, don't want to see it get a lower low than that, but there's still some hope of holding above 133. And so then I would say that I would want to have a red line in the sand at 133, because if it goes lower than that, then, maybe it just goes to 130. And then, okay, that's the bottom. That's fine. But if it breaks below 133, then it's also, who knows how low it's going to go. It could go to 1. And then that's losing, a quarter of its value from 133, if it goes down to 1. And that's, so to me, I would say, like, if I was in this or if I wanted to establish a position to trade this, I would have a stop loss at 133 or maybe at 130, let's say. Stop loss at 130 because maybe it fakes some people out, but, there needs to be a line in the sand. Otherwise, this is just going to be, oh, it's only $1 a share. I can afford more. And then just keep buying, and then that's endless. And then so I will also add a little bit more color here to... let's see, this line, oops, not green, I want to make it yellow. And that is the trend line going from that low of 133 to the pivot low over here at 142. So, as long as we don't hit a low of 142, putting in higher lows, so I think that's good. And then also what we can see here is when it did bounce here, there was a nice little push in volume, although following that, it's really just consolidated. And yeah, but I guess maybe the MACD down here, maybe this could be flipping over to green. Although, usually when that happens, whether it's to green or red, it's just like you want to kind of think of it as like a wave going from negative to green, just like a smooth transition, green to red. And so right now, it doesn't really look like it's getting this smooth transition. It's kind of like hovered around just being barely red, just being a little negative. And so I'm wondering if this could actually have another dip, another leg lower. So I would think that these levels will be hit 142. And so that's just like, cautious mode. But then, continuing on with this kind of color scheme, 172, I'd say that's kind of a breakout level once there's a close. So not just a wick above, but a close above 172. Then that's like, hey, following this downside move, this bearish engulfing candle and consolidation, we've actually gotten a close above, this level. And let's see, on the 10th, the high was 169.4. So maybe that's the level because that was, the high from that bearish engulfing candle day that engulfed the open and close from the previous day. Actually, no, I mean, this is the really big bearish engulfing candle. It didn't get all of the trading from the previous day, but it did get the open and close of that day. So yeah, I mean, I'd say 172, once we get a close above there, I would think that looks pretty good. But then after that, I would think that, starting to get into the, more cautious zone again, where I think that over here, it'd probably bump into some resistance around that trend line. And so, I mean, from current price, just going like straight up, like that's a 27% move to the upside. But also, there's probably about a 27% move to the downside, more than that, 33% based on the close of 156. to, $1. So I think that this seems risky. And, if I knew a lot about the company and, all of this stuff, maybe I'd be interested in it if I didn't already have other positions. But I just feel like the kind of market that we're in right now, maybe there's a nice swing here up to that will be around $2 potentially. And that also makes sense psychologically, getting up to that whole dollar number and getting into that resistance there. So, I could potentially see that as a trade, but I would only want to participate in that trade if I had some downside risk management. And that would be a hard line stop at either 133 or around 130, maybe 129, because maybe 130 gets hit. I don't know, but then you just keep talking yourself down. And either way, it's a loss. And so that's, 27% to the upside. But if it does go down to 133, that is a downside risk of about 15%. But also, I should note that in the after hours, it did go up about 6 cents to around 162. So, but still, below 172. So, let's see. Other thing that I wanted to draw with this is, you guys probably won't like it, but just a Fibonacci extension. So going from the high. Let's see, that was hit on March 18th. That was at 217.1, coming down to this low at 142. And then the high that we hit right after that, the day after, was 169.4. And so from that Fibonacci extension, we can get an idea of where this could go to the downside. Basically, that, this distance here from this point. And effectively, this is suggesting that this is a bear flag. And yeah, so I'm going to move this. Well, actually, I'll take a step back and I'll adjust it. So the 100% move would be around 94 cents. But let's say I adjust this third point to be at 172. Maybe we get rejected there. We wick up to there, but get rejected. So 271 or 217.1 is correct. 142 is correct, and then 169.4. All those levels are correct. Let's say I just change this one to 72 cents, and that puts us at, right around $1. And so, that is what I see happening with this, in all honesty. I think this is probably going down to right around $1. So do be cautious with it. But yeah, those are my thoughts following that reverse split. I think it's a potentially really cool setup. It's just like the kind of market conditions that we're in, whether it's tariffs, trade wars, actual wars, just the economy wanting to get rates lowered, and Jerome Powell not wanting to do that. If there's going to be Trump wanting to fire Jerome Powell, I think that there's a lot of downside risk in the market right now. And so maybe we see a bounce and this goes up to 2. And maybe, I'll just for fun, I'll put an alert at 2, which lately I've not been paying attention to alerts just because there have been too many going off. Too many downside levels have been getting hit and I can't pay attention to all of them. But yeah, so let's put an alert there at 2 to see if that happens. And, to avoid, alerts going crazy, I will add another alert. And this one will be for $1. And we'll go below. And when the alert goes off, I probably won't pay attention to it, or I probably won't remember this. But that's kind of, the range. And it's from, where we're currently at. I think I said about a 27% move to the upside down to $1. That's more than a 33% move to the downside. So I don't necessarily think it's the best risk to reward type of scenario. Oh, and I guess one thing that I could do, or no, never mind. I was thinking there's a gap there. It's that's not a gap. I'm an idiot. But yeah, anyways, hopefully that was helpful. And then I will probably move on to Unity software and just kind of record a video around that. But I might do a little bit of prep before, just kind of set that up, and then I'll dive into the video. And so as I get stuff set up, I'll leave the chat open. But I'm just at this point really just going to focus on getting this ready, the chart, and get some posts open from X to really talk about this. And so, what do I have drawn here? A lot of, it's like emotional support lines. I'm bummed that we broke down from this red uptrend. I don't know if I'm pretty sure because my position's really small in Unity, but to be honest, I plan on loading on Monday, which is maybe a bad idea for a call that expires in June. $42 call, just because I see, oops, this is, this level up here, 43.65, and that potentially, this inverse head and shoulders pattern still could be doing that, So, but I might, let's see, just clean up some of this stuff. And let's see, how do I want to do this though? Okay, so I got this 786 that I think is, I don't think that we're going to hit that. I got this purple downtrend, did test that. And yeah, I got to leave all of those levels. I bought at 153. 153 at 1533. I just got one share down there, but I was pretty proud of that. At 15.38. So I was feeling good about that. But yeah, this purple downtrend at the neckline from over here, I think that's significant. This, still is from that 52-week low, 1390, up to the high there. That's how we get the 786. So I think that lines up nicely. And right now, we haven't even done a 50% retracement. And so I'm just going to remove the 618 there. And I can actually remove these as well. Yeah, just so there's some downside. 1785 if maybe that happens. And let's see. Yeah, as this has moved up, consolidated volumes died down, just need a pump in volume, and then that will continue. Okay, and then so this, let's see. I think I could probably remove this because I don't think that was too important. And we do have this, upside here. Let's see, what is that alert at? Above 23. Okay, so I'll leave that. 14. I would say 1785 is, probably the alert that I would want to have. And so I might actually, just to kind of clean up the chart, I might just put this alert here. 1785 below there. And so that matches the 50% retracement. And then so I can just remove that so there's less clutter. All right. And yeah, 23. And then also, 30. Wow, what was the high over here? What was this high? I can't really see it because there's that white line right covering it. That high was at 30.88. And so I think that would probably act as some resistance. So I'll make that red. But actually, I don't know that that's going to be, I need to think about this. These colors, are going to matter. So that's, I think I have a 23. So this, that was green. Yeah, there's that's yellow. Okay, yeah, that makes sense. This line here, I would think at this point that's probably got to be green. That's a dip buy. Well, I don't want to clutter the colors too much, so I'll just leave it at white. And then this uptrend, I think that's probably going to act as some resistance, so I might want to make that orange. And then really, I should probably adjust this to, I'm going to say 25. I'm going to go big. actually, well, Y23. So I probably want to do a retracement here. Well, there are a couple things I can do. And so I might just kind of game theory them out a little bit. And so this, I believe I should just have the 100%. Okay, and the 61618, so that's cool. And then this one, if I go from that high down to that low, just a 50% bounce. Let's see if 50, I might do all of these. Okay, and so that makes sense. That makes sense. Cool. Why did I have 23 though? So I'll redraw these during the video. And this I would say is probably going to be red, but I'll make it thinner. Okay, and yeah, we'll add another alert here at 23. Why did I have that though? Good amount of consolidation here, that's why. Good justification there. Makes sense. And also, yeah, I mean, look at this. This is pretty cool. What was the low here? 22.20. I mean, what's the low over here? 21.22. Yeah, so getting into some levels there. HYMC, I'll look over at that before I get into Unity, and then I'll just record that. So let's see, Hycroft Mining. Let's look over there. Oh yeah, very nice. And so I have to say, you know, I put out a post on X. Let's see. So what was this date? This was March 25th. And I did not really, follow up on it because, let's see, on my, I wish there was an easier way to search my own posts, but from, okay, DGen, Andy, and let's see, Hycroft, HYMC. Is Hycroft topping at 3, and so that was February 13th. February 13th. That was, you know, I was saying, is it topping at 3? And that day hit a high of 305. So I nailed that. It pulled back. And then let's do the latest. And then on March 28th, Hycroft Mining low of 301 during market hours today. Oh, wait. So on March 25th, Hycroft Mining is at resistance and it's going to get rejected and revisit 3. So let's see, March 15th. Let's look over there. Wait, I'm reading numbers incorrectly. March 25th, not 15th. Okay, so right there, and then it's going to revisit 3. Revisited 3, hit a low on April 4th of 230, so pretty massive. 3 was over here, wow. Gap down from there. And then, you know, I just, reposted that on March 28th because from the 25th to the 28th, hit a low of 301. And I said, you know, did you hear what I just said? Nobody responded. No likes. And then 250. I should have bought puts on Hycroft Mining, and that was on April 4th. Yeah, and so I mean, so my analysis was spot on with that. I should have, not was going to. That was actually the bottom on that day. And so, you know, and then I'll just retweet this, and on this day I should have bought calls. Now you know what's gonna happen next. And then I will pull up an emoji and let's see which one. That is what I think will happen next based on my posts. And I should have bought calls on this day. Now you know what's going to happen next. So, yep. And what do we see here? It's still bumping into that purple uptrend. So this is kind of like megaphone pattern, maybe. I'm not really too familiar with them. I got a lot of stuff on the chart here. But yeah, same kind of rejection. And what we see is we do see a higher high. And in the volume's higher, so that's good. That's encouraging. But what do we see in the RSI? Okay, so higher. And maybe I'm just going to delete a lot of this legacy stuff. That is probably not too important anymore. Okay, so what do we see in the chart? We see a higher high. What do we see in the RSI from the same days? Lower high, or, to over here, lower high. If this keeps going up, we need to see that RSI hit above 72.85. We need to see it get into the mid 70s to 80, the RSI. We don't see that right now. So as of right now, this is bearish divergence. And we can actually even take this a step further, back in time here. What do we have? February 13th, is that when I posted this? February 14th, so the day after. But yeah, on here, what do we see? Higher high in the stock price. And, we could even extend that to over here. Higher highs. And this is very subtly lower high. And so, we just see a continuation of this pattern. Bearish divergence. So the last time this happened, over here, I had initially drawn this line right there. What happened? It went up a little bit more after that. So from, the close of that day, it went up a maximum about 10% higher. Let's say bought the dip a little bit, 10% higher. But then ultimately it pulled back. And from here, from that high, actually, let's not do it from the high. Let's do it from the close on that day. It pulled down almost 32%. And then so from this high here, so that would be like, let's say a week from now, it goes higher. Oh, and he was wrong. DGenEd sucks. This is going down, or he's going down. Hycroft's going up. But then I think it's going to be really important to, again, be paying attention to volume and be paying attention to the RSI, because from up here, after, we saw this bearish divergence over here start to form, it then came down 37.5%. Or, if we just do it, from like the kind of consolidation highs over here down to the consolidation lows over here, came down 30%. And so I think that, if the same type of thing happens again, that we could maybe get, let's see, we could do this based on a Fibonacci extension. So and we can actually, let's see, do a little bit of an experiment with this. So, okay, from this low of 199 up to this high. Oh, wait, that's a Fibonacci retracement. I want the extension. Okay, so from this low of 199 up to this high, and then down to this low. 328 was not a perfect predictor of the top, but it was a predictor of the top. And, that would have, from that pullback, maybe from here, it's like, oh, well, maybe this is a bull flag. Maybe this is going to start to go higher. Maybe I could do this Fibonacci extension to see where it could go as, it's consolidating here, as it starts to break out here. So let's say from this close, that's 15, more than 10% move to the upside. So that seems like a conservative trade. Seems fine. Seems reasonable. And, then we have this other level up here at just shy of $4, that purple line up there. But we can do the exact same Fibonacci extension, but from the low over here to this high down to this low. And that would be suggesting that, we're right around the top, 376 being around the top. But maybe this does go a little bit higher, and that would be up to like 460. So, yeah, I mean, I feel like that this has a chance at getting up to, maybe I'll make this yellow just so we can differentiate between them. I feel like it has a chance to get up to around 450, but did we get up to the 1618 on this run? That was at 394. Nope, we hit a high on this cycle up of 368. And that was at, let's see, that was on March 25th. So yeah, I mean, I think that this could potentially go up to like 450. I don't think it's going to get up to 466, but I think that would, this is bearish divergence. So I'm just going to make those lines thicker to suggest that, there are kind of topping signals. So I think that we're seeing a little bit of a topping signal, but we saw that over here, which, I'll just, so those are matched up, but still it's, lower highs in the RSI, higher highs in the stock price. So that's bearish divergence. We're seeing it again. Could see a pump up to 4 is where I feel like it would probably top out at, but maybe 450. And also, I mean, if this is like Elliott wave, I'll just pull that up real quick. Elliott wave. Okay, so that is like, for that type of thing, you see wave 1, maybe that's, I don't know. I mean, you could make an argument that there are multiple waves here, but anyways, this wave 3 here ends up being like the longest one. And so maybe, I mean, this is just 1, 2, but then 4. So these are like the criteria of it. Wave 2 can't retrace more than the beginning of wave 1. So we've seen that, higher lows. Wave 3 cannot be the shortest wave of the 3 impulse waves, 1, 3, and 5. So this has to be the longest, or at least not the shortest. And so far, this does look like it's longer than this one, but maybe we're going to see that here. And wave 4 does not overlap with the price territory of wave 1. So it does, because on this pullback, wave 4 overlaps with wave 1 here, which would be that. So this is not an Elliott wave, but like, so okay, I guess I'll doodle it, what I'm thinking. So like this is not an Elliott wave, but perhaps this is wave 1, 2, and then maybe 3, and then 4, and then 5, something like that. So that could happen, but there's some bearish signs, so I feel like this is unlikely. But yeah, we'll have to see. And I do see that Sandy is in the chat, and also Horatio. I just have a follow up. But anyways, before I read, I will say good morning to Sandy. Welcome. And then Horatio saying, I'm trying to diversify a little. I recently bought RILY and BNZI. I'm going to buy a few different ones each. Check. So I'll come back to those. I just want to get into the Unity software video. Otherwise, I won't release any videos today. And so good morning. It's what Sandy's saying, everyone. GME, everyone. I can't watch the live stream this morning because I'm on my way to the gym. Watch later, no problem. Enjoy your workout. And I will release clips from this. So if you do see videos that come out later in the day, those are probably just clips from this. And so if those are stocks of interest, you can just watch them. Or if you want to hang out, in the stream after the fact, that's cool too. So however it works for you guys. For me personally, I don't necessarily like Trading with Emotions or TWE charts. He does like very like casual open live streams, kind of like what I do. But I don't know. It's like I don't always watch that stuff, but I do watch the ones where it's like 20-minute long with Gareth Soloway or let's see, Scott Milker. I've been following his crypto stuff a lot lately. But yeah, I'll add Horatio's tickers up here, so I'll try to look at them. But first, I'm going to go over Unity, which might be like 20-minute rabbit hole. But so yeah, I'll do Riley there and BNZI, Bonsai International. So I'll pull those up in a little bit, but I am just going to switch over to Unity, and I will minimize that and adjust this. And then so I'm gonna, the chat will still be open so you guys can chat amongst yourselves, but I will, let's see, but I will hide it from myself so I won't get distracted, because I end up doing that. Whenever a chat pops up, I always catches my eye. And hopefully the stream's going well. I'm getting a little bit of an error from this, which I'm just going to open up in Studio to see if, yeah, so not sure what's going on. If the stream's a little clunky, sorry about that, but I'm just really using this to serve as, a way for me to record some videos. So I do have the chat hidden now for myself, so I won't be able to see that. But I will open it up once I finish with this recording, this video on Unity software. And so let's see, I'm just going to make sure my windows are open here in the way that I want them to be. And so I'll just close that. And so let's see, I want to get into that, this post, and okay, and then so I probably want to, from there, okay, so, sorry, I'm just kind of mapping out my thought process for this. Maybe, yeah, okay, so maybe I want to do that. And let's see what, I don't know. Yeah. This, before I start that video, this is the contract that I hold, which is really risky at this point, just about 2 months before it expires. But this is the $42 call that expires the monthly contracts for June. And so for me, what I plan on doing, I think I have 7 of these contracts at an average price of around, let's see, I'll just tell you before I start the video, but I have 7 of these contracts at an average price of 41 cents. Pretty ridiculous. If I, on my Webull app, if I go to buy, it says the limit price would be 46 cents. But the only fill that happened on Friday the 17th was at 7 cents. And so for me personally, I just want to, and then it looks like the low high average, whatever. On the 16th was 10 cents. And so for me, I really just very aggressively want to get my average down because I think that this is probably going to be taking off. Do I think it's going to go to $42 before June 20th? No, I don't. But I think that there's an opportunity here to not only get out of my position without losing money, potentially to make some money. And so the time is now, I kind of view. And the lows in this, let's see, I've been 7, sub 10 cents for a little while. But this is not, the most attractive of contracts, but that's probably because it's been bleeding a little bit. And so let's see, I might actually just look up what the max pain is. Maybe I want to include that in the video. 20. What is the stock price? 19. So we did close below max pain, but then it's 18. So yeah, I mean, that's something that I'll probably want to mention. And let's see. So maybe I'll dive into that. Yep, and then I will come back over to unusual whales to look at the flow feed and then just to see this. Okay, cool. So yeah, I'll just kind of start recording this video. And maybe I should check out the moving averages too. Those are above us. So I'll want to pull those up in a minute. But yeah, I'm just going to effectively start recording this video. And it maybe takes 20 minutes for me to get through Unity software. You can watch a clip of it as a video later, or you can wait 20 minutes if you're not interested in Unity software, and then I'll be on to some other tickers after it. But yeah, so I'll just start this, and yeah, hope you guys enjoy. Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Unity software, ticker symbol U. So here I am recording this on Saturday, April 19th, after Unity software closed on Thursday the 17th before the long weekend at a price of $19.23, being up about 1.8% on the day and continuing up about 22 cents into the after hours to around 1% or so higher at 19.45. And so, yeah, I wanted to dive into the chart here, go over some levels that stand out to me. Did just adjust those during the stream and the levels. And yeah, just kind of wanted to dive into where I think this could be going to. And I have to say, a lot of this is inspired by some posts from the Bronx Viking on X. So here he has these two charts. Corporate wants you to find the difference between these two photos. The one on the left is Unity software. The one on the right is SoFi. And he's just saying, straight algo mode, like the meme with Pam from The Office, saying they're the same image. And so here we have this, what looks like a bull flag formation. This is for Unity software. And then over here with SoFi, we also have a bull flag formation. It looks like there's been a little bit of a breakout though. So maybe SoFi is a little bit ahead of Unity here. But yeah, I mean, this got me really excited to see some more bullish sentiment around Unity. And then also I did kind of a deep dive, which I'll go over this in a minute, based on, another post from the Bronx Vikings. So I'll also get into that. But I first wanted to talk about the stock chart, and also just considering the max pain for Unity software. We do see that for the 17th, for Thursday, prior to Good Friday and the Easter holiday weekend, we did have a max pain of $20, whereas, Unity software closed below $20. So that's not such a great look, but this upcoming Friday on the 25th, max pain is 18. So maybe we could trigger, a gamma squeeze or gamma ramp if we do start to close above that max pain or start to push that max pain higher. The following week, though, beginning May, for the second Friday close on May 2nd, we have a max pain back up to 20, so maybe that would kind of suppress price a little bit. But then May 9th back down to 19 and 23 here, and so on. 23 might hold that down around May 16th. I believe that's the monthly contract expiration. But if price is notably above or right around 23, following that, the max pains are pretty reasonable. They're all lower than 23. So maybe we do start to see some nice price action into the coming months. And that is, in fact, what is suggested by these options flow charts. But, just coming back to the post, looking at the pattern here with Unity, that potentially being a bull flag pattern that may very soon be breaking out. Let's dive into the charts here. And so we can see that we do have, upside move with that big green candle here on April 9th, hitting a high on the day of $20.37, going up 19.34% on the day. Just a massive upside candle there, which we've seen across the market there. And really, this makes me think that low of 1533 was maybe cycle low for Unity. Do we hit all-time highs or go up to, 30 or so? I have no idea, but I do think that at least in the near term, 1533 is going to be the bottom. And so we can see this bull flag pattern. And if I do just pull up the moving averages, we can see that just above us, and maybe this is not such a great sign, that we will be bumping into resistance, maybe corresponding with that max pain coming up on May 2nd, that being at $20. Maybe that serves to keep the price down a little bit. With these moving averages just above us, the 21-day is the pink one there. That's around 1979. That does look like it is kind of the top of that bull flag pattern that the Bronx Viking highlighted here based on the highs from, let's see, I believe he has the 1 hour time frame here. And so that would be basically the high from here. And that was on the 9th of April. And then the high from the 14th of April, that gets the top of their 21-day moving average, does seem to correspond with that top. Just above that in blue, we have the 200-day moving average. That looks like it's around 2056. And then just above that, we do have the 50-day moving average at 2162. So that, really the $20 to $22 range, there might be some resistance there corresponding with those moving averages. But let's see, some things that I wanted to talk about here is that I had talked about 1538. I personally actually bought the dip there, not a huge buy or anything, but at 1538, just 5 cents above that low that was hit on April 7th. How did I get that green line? Really, I guess you could say it's kind of arbitrary, but over here, when we were kind of consolidating above that level, I picked the low from June 20th, which was at 1538, and actually on June 21st, we hit a low of 1523. That would have been a greedy level because we only hit a low of 1533. So 1538 was a great dip buying level, that green line there, which was tested multiple times over here. So I thought, maybe it would be tested again. And, if I do scroll forward, we can see that was a beautiful retested level, a great dip buy. And from that level, we are now up, 25%. So looking good there. Also do have this purple line to the downside, and that was really, this is when I started to first cover Unity software. I believe it was requested during a ticker request live, Sundays, 9 p.m. Eastern. I stream for ticker request live, take ticker requests, go over them live. And Unity was one of them. And I started to notice this downtrending channel it had been in for a while. And then, hey, maybe there's this inverse head and shoulders pattern, did get a measured move to the upside and beyond. But that neckline, that was notable resistance over here. It might act as notable support. And we actually did see it bounce from that purple line over here. The neckline there also corresponded with, this 786. which is actually the retracement from that all-time low, or the 52-week low, I should say, of 1390. That was hit on August 7th. And then going up to the high that we recently saw on February 21st, that was at a price of, let's see, $30.88. The 786 retracement from that, pretty coincidentally, corresponds with the lows that we were seeing here in November following, this move up here. And I believe that was actually the 618. So let's just see if I have that marked on here. Yep, the 618. The numbers are kind of overlapping there, but that does look like it's not the 50%, 618, 786. Yeah, so that's the 618. Just got the numbers all lined up there. So maybe if I do it like, nope, it's all just going to be overlapping there. But anyways, yeah, I mean, so that was a 618 retracement. Now we've seen that level be a 786 retracement, and there just being, a number of levels lining up there. So pretty interesting. And then also I have this orange uptrend. I will come back to that. But then, looking over here, we did retest that, that purple downtrend, the neckline, and, that would have been, a little bit of an aggressive buy, a little premature of a buy, because the low, let's see. I can't get this lined up. That would be around like 1650. Could have gotten a more than $1 discount waiting for 1538. But still, I mean, maybe there's buy a little bit here at 1650 and then a little bit more at 1538. That would have been a really nice dip buying bottom there. And also the 786, I mean, that's at 1750. So really it's just like these dollar discounts from 1750, 60, 1650, and around 1550. That was all, very nice dip buying territory as far as I can tell. If we are forming a bull flag here, like the Bronx Viking is suggesting, then I would expect that we would get a breakout to the upside. And we have been holding 1844, more or less. That's the 382 from this Fibonacci retracement here. We have been holding that as support. But if we do break a little bit lower, I do have this alert here at, let's see, 1785. And that corresponds with the, 50% retracement from that Fibonacci. I just didn't want to have it cluttered. And, so that's, 1785. Is that what I said? Yes, 1785. So maybe that is a level to be, taking advantage of a dip if we do get that. Or, maybe just coming down to around 1750 or 1753, marked there by that 786. But I, to be honest, don't really expect 1750 to be hit because that was tested over here. We did kind of fake out, break below it over here, and I do expect that this will be breaking out, that this is a bull flag like the Bronx Vikings suggest, because there is some bullish data with the options flow that I do want to go over with you guys. I do think that this could be breaking out to the upside. But where could this be going, really just based on the chart, forgetting about options for the time being? Just let's think about some levels to the upside. So I had this alert here, and this is at $23, and I was contemplating, well, maybe I want to adjust that. One of the options contracts is for 25, where this alert is. And so, I was kind of thinking, well, maybe that's a better alert to have. Although, let's see, if we do bump into that orange uptrend as resistance, getting up to 25, that would put, if that corresponds with that orange uptrend, that would put it, in July, the middle of July or so, getting up to that uptrend, that acting as resistance. I think that we're going to be seeing some upside moves well before July, really in the next 1 to 2 months, based on the options data. So I actually think that 25 is a little bit, I think that we'll probably, with that being said, I think that we'll probably be breaking above this green. I don't know why. Sometimes I mix up orange and green. I'm not colorblind. I just think it's words. But I do think that we will be breaking above this orange uptrend. And but yeah, I mean, in more of a realistic time frame, 23, that would correspond with the middle of May, earnings right around here. So maybe we bump into resistance over the next month around 23. And then we break above, maybe corresponding with earnings, get up to 25, and maybe get up to this red downtrend, which did act as some nice resistance that we were able to kind of predict the top here. I think I sold some calls that I had here on this big green day, but not up here. I could have played that a little bit better, but the high that we hit on February 21st was $30.88. I've already mentioned that level. That was just below that thinner red downtrend, which if we look back in the chart, that corresponds with the first pivot point being, I believe, the high from August 12th of 2022, so going back pretty far in time. And this really corresponds with, the downtrend channel that I had initially noticed that we were trading in. And then the other pivot point, this looks like it's the closing price from July 19th of 2023. And then we did, retest that over here on December 27th of 2023 to start to form what I think maybe this is the left shoulder of an inverse head and shoulders pattern. And then bigger picture, we are potentially going to form the head of that inverse head and shoulders pattern, and the neckline for that would be around $43 to $45. So I find that to be pretty interesting. While we did break down below this orange uptrend, we still have, higher low here. And so we are still forming this head. So it hasn't been negated yet. So I could see that, by maybe, believe it or not, by July, based on this drawing that I have here, by the end of July, let's say that we could be at this neckline around 43.65. So I think that looks really good, but we do have, like I said, resistance around 23.25 we can see here. That kind of corresponds with the intersection of that red downtrend, that orange uptrend. So that would be around 26, actually. It looks like right there, right on the dollar intersection there. So maybe could be seeing some resistance around there, then also getting up to around 30. So maybe this doesn't play out as quickly as I have drawn out. Maybe this we don't finish forming that head until the end of 2025, beginning of 2026. These things always take longer than we expect, so I could actually see that being a more realistic time frame. But with that being said, going from the measurement here from around $14 up to around $45, that would put the measured move to around, I believe, let's see. So let's see, I'm just going to pull up the calculator here so we can just do this. So let's see, about 43.65. So let's just say 43 minus down here around 14 bucks. Okay, so that's around $29. And then so that would be the measurement, $29. Add that to the neckline, so plus 43. This would be, an approximate target of where this could go if this inverse head and shoulders pattern does play out. So around 72. So I find that to be, really appealing for the long term. Do I think that's going to happen this year? Probably not. I feel like the high for this year would be around 43, but a high for 2026, 2027, 72. Yeah, so I feel like this is definitely a deep value play. Whether it's at 20 bucks, 19 bucks, 14 bucks, I think that this could be a really nice long-term hold. So that's kind of how I'm thinking about it, but I also think that this is a nice one to be trading around the volatility. And so that's kind of what I wanted to talk about with these posts from the Bronx Viking on X. And so I kind of dived deeper into this post that he had where he said, Unity Software, ticker symbol U, whale still holding over 20,000 calls that expire on June 20th. And so I'm just going to pull up these images and then we can dive into them based on the post that I have above. And a lot of this also kind of jumps into some tinfoil hat theory, just having some fun with it. Which comes from the Bronx Viking and also just, connecting some dots. Unity, Rick James from Dave Chappelle, and, a lot of stuff. There's a lot of U's popping up, and, so I will talk about that as well. But so this is, the $25 call. I talked about $25 potentially being an important level. About 2 months from now, expiring June 20th, that's the monthly contract expiration. And so what we can see for this contract is on April 7th. There was this big green candle that you can see there that suggests, a lot of buying for this contract. And so the candle volume was around 12,000 contracts, over 12,000. So that's buying of 12,000 contracts. The candle premium represents $878,000. And that represents the majority of the buying for that day. Daily volume, daily premium, being very similar to that one candle there. And actually, that should be the exact same numbers because these are daily candles. So, but I expand upon this and actually dive into the trading for that day of this contract. And so what we can see, what Bronx is talking about here, is we see this big green candle. And we don't see any big red candles following that or any big candles corresponding size that suggests selling. And so this is, about 10,000 contracts. They're still being held is what it looks like. And then if we look at the other contract that he posted, this is the $30 call, also expiring in June for those monthly contracts about 2 months from now. We see another candle volume around 12,000 or, approximately 10,000. So 10,000 plus 10,000 is 20,000. That's what he's talking about. We see this big candle volume here, green buying, represents about $400,000, and we don't see any selling. So this whale is still holding, as he does suggest here. You whale still holding, and to be clear, he should probably say you whales. Potentially there are two because there are these two contracts. 20,000 calls for June 20th. And so I find that to be pretty interesting, but because he just posted, the daily candles here, we can see that there's no follow-up to a lot of selling for either of these. So that does look really good, but I want to look at actually the data on those days. So that's what I do in this post. And so I'll just read it to you guys and then just kind of go over my breakdown of it. This is really just screenshots from Unusual Whales, and I maybe will dive in a little bit deeper to them, but I'm probably just going to go off based on these screenshots that I have here. And so I just say, thank you so much for posting these Unusual Whales screenshots, as they serve as a great example, or as great examples for me to explore. This channel is all about learning, whether that's my learning and diving into the stuff, or maybe you guys can learn a little bit from me. That's what this is all about. It's just like a little trading journal, having some fun doing it. And so from filtering UFlow data to April 7th through 8th and premiums to $100,000, greater than or equal to $100,000, I can see a few interesting or few unusual things. And so that is referring to this screenshot that I have here. And so what we can see is I filtered it to Unity up there. And then also over here, you can see just the U there. I filtered it. I've also filtered the time to be from April 7th to April 8th. And behind Ed, so I might get him out of the way, we can see that I filtered the minimum premium to be $100,000. And so what we can see are these contracts that, stood out as meeting this criteria for those 2 days. So these being contracts that were, these orders that were filled on April 7th, and then these above that white line there are from April 8th. And so I might, let's see, take a step back so I can just see what I wrote here. And so number one is a number of 10,000 or 10,000 sized orders, with most being purple. And so that means that size is greater than open interest. including the $25 and $30 calls expiring June 20th that were identified by the Bronx Viking. And so let's see, I can, pull that up here. This is, from Unusual Whales. We can see that these numbers here are purple, lots of 10,000. And so what does that purple mean? If I hover over it, I believe it should say, but let's see. What does that 10,000 mean? We can actually just click on the contracts here. And so this one at the bottom is the June 20th expiration for that $20 call, buy order. And we can tell it's a buy order, that it looks like it's a buy order because it's on the ask side. And so that is, going to be a majority on the ask side. That is going to be a more bullish sign, although that does not necessarily mean that they're all being bought, because sometimes buy orders get filled on the bid side. Sometimes they get filled on the ask side, usually on the ask side. But anyways, let's dive into this. And so what we can see for that day is, let's see, what did I want to, I might be diving into the weeds a little bit here, but we can see that spike for that, let's see, these are the 30-minute candles. We could see a spike here. That is the, over 10,000 contracts. But so what we can also do, maybe I'll just do the kind of the example here. What I did is over here, once I've kind of opened up this contract, I can filter it by the date to be, let's see, this was from the 7th, so I can filter this to be the 7th. So that's the most recent date. And then, if I go back 90 days, we can see that, this is the first time, basically in the history of this contract, the past 3 months, that we've seen this massive buy. And then we can also pull up the data from that day. This is the premium net call and put premium data from that day. And the net premium from April 7th was an increase of, $500, almost $60,000. Let's see. Yeah, so this is from April 7th. I might actually be missing, yeah, because this is for all contracts. This actually shows that net call premium came down on that day. But for this specific contract, a $25 call expiring in June, we see this massive bump. So, the data over here, it's not really that useful in identifying, hey, this is an unusual position that was opened on that one specific contract. But anyway, so that's how I filtered that to be that day. If I make it to be more recent, we can see the more recent data there. Going back 90 days, let's just go back 14 days. We can see that there. But yeah, anyways, I'm going to get lost in the weeds with that. So I'm just going to pull back up this post so from this, we see the purple there. These had the volume traded on that day greater than the open interest. And then so the next point that I make is, from April 7th to 8th, open interest increased from less than 10,000 to greater than 21,000 for the $25 call, and was 20.8 thousand on April 17th, so on Thursday. And so I got the little bull emoji though. That makes me think that it's fairly bullish. And so, just like I had shown over here, let's see, I filtered this by, let's see, going back to April 7th. And so I have multiple days here, but if I just isolate it to one day, we get the kind of higher resolution, action for this contract for that day. We do see the alert here with that exclamation point up here. Volume has exceeded open interest. So that looks really good. And that is, why we see, let's see, where was it? From the table, that is, oh no, not that one. Sorry, I'm jumping around. If I switch back over to this image, that's why we see the purple 10. Oh my gosh, it's behind me. I'm sorry. So I'm going to just have to remove myself for a second. So we see these purple, green, these purple, green. See, I always just want to say green. As we see the purple numbers here, the 10,000s, also the 16, almost 1,700. That means that the volume traded was greater than the open interest, and so that suggests, positions are being opened, whether that's sold to open or bought to open. These that are on the ask side, very clearly they seem like they were bought to open. And so this is the, let's see, $25 call that expires in June, as I'm talking about. And so I'm just going to pull myself back up here. So for that contract, we can see the data, which is, let's see, the same data that I have over here. So let's just make sure that is correct. Yep. So that is the June $25 call that expires, and this is for the date of April 7th. And so we have the exact same data over here. And so from that screenshot, I just am hovering over the candle. And so we can see that, basically, 10,000 contracts opened, what it looks like for that candle, that one buy. Maybe that's Roaring Kitty, maybe it's not, no idea. And then from my post, let's see, and I might actually, so I've got it over here. So average fill was at 73 cents. And so average fill 73 cents. So that's good. So I'm just going to escape from this so I can read, what I have said here. So open interest increased from 10,000 to 21,000 and remains right around 21,000. And so what we can see is that from the 7th, open interest at the start of the day was less than 10,000. We saw a volume of around 12,000 on the day, but an increase of around 11,000, going up to around 20,000 at the start of trading on the 8th. And then if we do look over at the data over here, we can see that from the 17th, open interest is still, right around 21,000. So the 10,000 contracts that were opened, they're still being held. So that's a good sign. And then coming back to my post here, the third point that I have is from April 8th to the 9th, open interest increased from less than 12,000 to greater than 22,000 for the $30 call that Bronx also pointed out, and was 22.1 thousand on April 17th. And so I have that highlighted in this third image. So from April 8th, I have it filtered to that daily data. We can see that candle was, exactly 10,000. So very similar to the other order. And we can see that it was less than 12,000 at the start of trading on the 8th. We saw a volume of over 12,000 on the day with an increase of over 10,000 in open interest, leading to an open interest of around 22,000. And then if we go over to this custom flow here, and if we look at that $30 call that expires on June 20th, we can highlight that to look at the data a little more closely. If I filter it over here to April 7th, we can see, sorry, not April 7th, April 8th. It's like, why are there red candles? This doesn't look right. So you always got to make sure things make sense. From the 8th, we can see that big spike. And actually, because that was 10,000, and looking over here on the 8th, open interest was, more than 10,000. We did not get an alert here for that order until later in the day. Volume has exceeded open interest. Volume is over 12,000, whereas open interest from that day, which if I scroll down here, we can see open interest 11,839, so 11,839. So we should be able to see that number here. Open interest 11,839. So that makes sense. Volume at that point has exceeded, but not because of this whale buy, which may be Roaring Kitty, maybe not. I don't know. And yeah, and then now the open interest is still above 22,000. So it does suggest that, there is a buy there. And if I do switch this back over to the 17th and I go back 14 days, we can see that buy over here. And we haven't seen any massive sells or anything like that. So that does make me think that this whale is still holding, as the Bronx Viking suggested. And then going on to the other point that I have here is there were multiple greater than $1 million orders, on the 7th to the 8th, although I'm not certain all are long, since some filled at the bid, whether that's sold to open, which in my understanding would be like selling covered calls. So it's like there's no open interest. Let's say open interest is 0, and I have hundreds of shares of Unity software. So I could then sell covered calls that would then open these contracts in the options data. And so that would be selling to open, selling covered calls. So that's bearish, or that's just hedging. And so that, with Max Pain, like I was just talking about, being 18 for this coming Friday, maybe we see a dip buying opportunity with Unity. So I find that to be pretty intriguing. And also, not getting paid for this, but just with this note down here, Easter sale until April 22nd. So get 20% off options flow upgrades, or I believe 15% for getting packages. I already have a subscription to it. I love Unusual Whales. I'm learning a lot with it, so I'm not really able to utilize it fully just yet, but I do think that it's a great tool to have. But anyways, with those, possible covered calls being sold, maybe we do see a pullback to around 18. And then maybe we start to go higher. I don't really know. So maybe that's maybe we'll see those covered calls get bought back on a little bit of a pullback. So maybe I find that to be interesting. And then, so coming back to this, looking at, the filter that I have just for the 7th through the 8th, we can see, multiple $1 million orders. So initially, I should say that $25 call that expires in June, there's only $730,000 behind that. So it's not $1 million order, so nothing to get too carried away about. But then we see this $20 call that expires in September, 153 days to expiration. And that was on the bid side. So that suggests, that it's bearish, that it's, sold to open. But that could just be some hedging. We also see another very similar contract, $20 call on the bid side, but that's for the June 20th expiration. And that is, on the bearish side, because the majority of it is on the bid side. Both of these over $1 million, both of them being 10,000 contracts. So I find that to be pretty interesting. All of these 10,000 contracts. And then we also see a leap. This is for the January 16th expiration of 2026. So a little less than a year from now, 272 days to expiration. That's the $25 call, also being bought on the ask side. So that is bullish. That represents $2.43 million. So we have multiple over $1 million, two of them being over $2 million, but some of them potentially being hedging for the possibility of maybe a little bit of a pullback. And so we can actually, I'm going to dive into the weeds on this one. I'm sorry if this video is too long, if this is too long in the stream, how I am recording this, but we need to dive into this data. And so I'm just going to filter this again to, let's see, the 7th, so we can see that this is, we got this alert up here. Volume has exceeded open interest, so that makes me think these are covered calls. Somebody owns, hundreds of shares. This would be hundreds of thousands of shares because, so the volume is, let's see, 10,000. And if we pull up that handy dandy calculator, we can see 10,000. So we got 10,000 contracts, and then let's multiply that by 100. That represents, 1 million shares. So whoever, let's say, sold covered calls here, they potentially had, 1 million shares. And so from those 1 million shares, if those are to be sold at $20, that represents about a $20 million position there. That's pretty hefty. So yeah, maybe that's tinfoil hat. I don't know that there's being sold as covered calls. I don't really know. But if we do look going back the 90 days, really, there's been nothing earlier on. More recently, we've seen some blips here in like February, March, but we see this massive spike in volume on the 7th. That candle volume for the entire day is just over 10,000. But if we do look at that contract, we see that it was a $10,000 order. So is this the one that maybe I shouldn't have taken a step back. Was this? Oh, yep. So I need to just, filter this again to be April 7th. And so we see, what we were just looking at, 10,013. Candle premium, $2 million. So that is like saying, if this was somebody who had 1 million, was it 1 million shares? Let's see what it pull up on that calculator. 1 million shares. Yeah. To then be selling them to be collecting. Wait, let's do this math again. So that's 10,000 contracts. Each contract represents 100 shares. And so that's 1 million shares. Let's say somebody has 1 million shares and then they sold that covered call to collect a premium. Let's look at the premium. That's something that we need to do. But if they were to get out of their position, if it were to be exercised, that they would be getting paid $20 per share. That would represent $20 million right there. So, and with current price being, right around 20, it's nothing too crazy. But if we scroll down here to look at the average fill for the 7th, the average fill was around $2.70, and we should be able to see that highlighted here. Average fill for that day, $2.70. And so that's 10,000. So another way, oops, I didn't mean to escape that. I meant to pull up the calculator. So I'm going to have to, actually, I won't backtrack because we don't see any big candles here following that. So this is going up to the 17th, as you can see here, date through Thursday, the 17th. So that's going to be over here. And so the 7th is right there. So that $2.70 fill with times 10,000. So let's just clear the data on the calculator. So $2.70, okay, times 10,000 contracts. So that person got paid, $2.70 times 100 shares. That person got paid $2.7 million for selling all of those contracts as covered calls. And so maybe that's bearish. That's saying that, price might be going below $20 a share. And then they would then want to buy those contracts back or their shares back when price is below 20. So that's kind of what that suggests. So maybe it's a little bit bearish, but maybe it's a little bit bearish short term, considering that max pain for this coming Friday is 18. Maybe we see dip buying opportunities leading up to that. So I find this to be pretty interesting, but it's a little tough for me to wrap my head around this because this is selling to open. I believe that selling covered calls, I would say that's probably just hedging based on shares that are probably already held, 10,000 shares already held. But we can look into these other contracts as well. So here is one. This is a $20 call that expires in June again on the bid side. So that makes me think this is somebody selling covered calls. And so what we can see here, if we do scroll back to the 7th, so we see that date up here, we can see this big spike here. So we did see back here candle volume. Oh, this is over the past 90 days leading up to the 7th. That's the most recent day on this chart here. We did see some buying of calls here. And so that was, 3,000 contracts opened is what it looks like here. And this was on March 10th. So maybe some of those were sold here, but that doesn't really make sense to me, because why would somebody buy these contracts, an average fill of $4.15, and then sell 3,000 of them down here at an average fill of $1.66? That would be selling at a loss. So that doesn't really make sense to me. I think that this is probably just somebody going long, and this candle premium, I should note, is $1.3 million. Maybe they were just early, and maybe they also just had a bunch of shares. So maybe when they were going long here, when the stock price was, let's see, on the 7th. So maybe I want to go back in time to the 10th of March. So I'm just scrolling down here to see the 10th of March. So we can get the data from that, and I can just zoom into the 1 day here. And this, hey, kind of got an alert there. Volume has exceeded open interest. It says over $1 million going long. And for that date, we see, the spike in, this is all contracts, so maybe you don't necessarily want to be looking at that too much. But if we do scroll back in time here to March 10th, we see that open interest on that day was less than 3,000. But then we saw volume exceeding that open interest of over 3,000. And then we see open interest increase by about 2.6, almost 2.7 thousand contracts, going up to around 5.4 thousand contracts being open. And moving forward into the future, we still have over 5,000 contracts open. Now getting into April, now see 6,000. And then on April 7th, when we saw the other, the big sell is what it looks like, we saw open interest of over 6,000 with a volume of 11,000. And so maybe I actually want to adjust this to be that day, which was April 7th. And so here, this should be the same data we were just looking at, where the cursor is. Open interest of over 6,000, and then volume going up by 11,000, and then that open interest increasing by 9.6 thousand. However, that looks like it was sold to open. So that looks like it's more on the bearish side or hedging side. And so the open interest here is now, over 16,000, now still, above 15,000. And so I think that those, from the 3,000 contracts, it was really, that were opened on March 10th. We had, 6,000 open interest, and that only increased by about 10,000. So I think that, this is, these contracts are still open, but they're, more on the short side. So maybe we do see a pullback corresponding, with Max Pain coming up for this Friday of 18. I think that we could be seeing some dip buying opportunities in the short term is what this makes me think. But then if I do escape this and then look at this other, still, looking at data from April 7th, this is the $25 call that expires in January. This is on the ask side, so this is more bullish. This is a leap. This is over $2 million. Looks like going long for the January 16th expiration. So if we just look at that and we do look at the data from just the 7th, So we get some high resolution data there. This is just one day. We see towards the end of the day, $2.4 million going long. And then if we do look back the past 90 days, we can see that, this is the first really big position opened on that contract. And, open interest, we got an alert there. Open interest volume has exceeded open interest. So prior to the 7th, open interest was around 4,000. And looking back in time, 90 days, we don't see anything really too notable until, got these spikes here. There's some spikes back here as well. But, there's some, I'm not going to dive into the weeds too much. Clearly, we see something spiking up here that looks unusual, that stands out. Candle volume of 10,000, whereas the candle volume over here was 2,000. And that was back in December. So that's kind of noise relative to this big spike. And then if I do adjust this to be on the 17th, so the last trading day, over the past 90 days, this, really stands out as, a buy signal at a bottom. So that looks really good. And then if I just adjust this to the past, I think I got to do 14 days to include that candle. We don't see any selling following that. So it does seem like that position is still being held. And so I might adjust this to the 1 day and then adjust this back to the 7th. So we just see that one big buy there, over 10,000 contracts open, premium over $2 million. And then scrolling down here to the 7th, 4,000 contracts that were previously opened, then a volume of over 10,000 contracts. And then we see the open interest increase, by over 9,000 contracts. And that open interest is then 13.8 thousand. And then we look scrolling forward into the future, 14,000. And still we remain above 14,000. So that is bullish long-term contract strike, $25 above current price of around $19.50. And this, this is a leap. That seems pretty good. I could do some math on, the fills for this. Let's see. This was the average fill for this was, $2.43. That has increased to the average on Friday was $2.73. So they're in the money right now. They're not in the money because the contract is still below that strike, but they're green. So that's pretty interesting. So two of these make me think that this is bullish, both in the coming 1 to 2 months with the June expiration here for the $25 call that was on the ask side. Also in the longer term with the $25 strike, but with the January expiration that was also on the ask side. So both of those make me think that, really between the two of them, millions of dollars, or combining the two of them, over $3 million going long Unity. But that when we see here, with these two contracts that were opened on the bid side, $20 strikes with the expiration of June 20th and September 19th. So 62 and 153 days between now and expiration for both of those. Those make me think that that's a little bit of hedging because of Max Pain being below 20 for some times between now and June 20th. And also, but then getting up to, September, we don't see, between now and June 20th, there are some Max Pains that are sub 20. So it would be a good idea to hedge a little bit, or at least to prepare for getting below $20 a share. And so if this does dip to 17, which is the Max Pain for May 23rd, that could be a nice time to buy back those covered calls and then to go fully long Unity with strikes at 25, 30, above 20. That seems pretty good. So I feel like those could be just some like hedging maneuvers around, what Roaring Kitty or whoever this is might be doing with that. And then to look at the other contract, I'm spending way too much time on Unity here, but what we see up here is actually there's another one that I want to look at. I'm sorry. But this is the $30 call that the Bronx Viking pointed out that expires in June on the ask side. I've already kind of talked about it. 10,000 contracts opened. This is a premium of only $330,000, so not that exceptional. But what we see, another position, and this one is actually also very interesting. This one gets me excited. This is the $25 call that was on the ask side. So this is a buy to open is what that suggests. Call that expires September 19th. 153 days between now and expiration, another 10,000 contract order. $1.6 million on this one. Because it's on the ask side, this is net bullish. 10,000 volume. So this looks really good. And so that was from the 8th. So I'm going to filter this to the 8th. Take a step back. We see we got that alert there. Volume has exceeded open interest, over 10,000 volume there. And if we do scroll down to the data here for the 8th, we can see that the open interest was 4,800, as we see up here from this alert. So that makes sense. And then the volume was at that time over 10,000. But then for the day, the volume ended up being nearly 12,000. And from that open interest being at 4,800, it goes up by over 10,000 to put the open interest at 15,000. And then let's see, it does dip back a little bit. Some sell-offs happening following that. Decrease of 365, then an increase of 18. And then if we look from about 15,000 there, we're now at 14.8 thousand open interest. So still the majority of this being held. And then if I just take a step back, so this is not just the past 1 day, but the past 90 days, we can see that there was some price action or some contracts being bought and sold, some trading of this contract in the past 90 days, as this is filtered to the past 90 days up here, but nothing that stands out so much as this candle that we see here on the 8th of April. And then so from this, now that I have, let's see, the 1 day there, we see this spike here on the 8th. Let's actually adjust this to the past 14 days from the 8th, but then I will adjust this to the 17th. So we can see that from that big buy on the 8th, we don't see any other big candles here. I can't make those candles any bigger. But yeah, I mean, from that, we don't see anything that exceeds this. That was an average fill of $1.60. The current average fill was $1.59. So basically the fill that this person got, 160, that was the average fill on Thursday the 17th. So still right around there, still in, dip buying territory if this was a good dip buying opportunity. So I think that looks pretty good. September 19th, there's more time between now and that expiration. It's not hundreds of dollars for this contract, or it's $100+ for this contract, but it's not like you got to put thousands of dollars down to buy one contract. So or hundreds, plural. This is 160. So yeah, I mean, I think that this is pretty exciting. And let's see. Yeah, I mean, this is just bullish, more bullish data there. And then we do have these puts here, but these are, smaller sized. This one, was, volume exceeded open interest. But this is the $16 put. This is already expired. It expired a couple days ago. And so this was a put on the bid side. So that's bullish. This was a put on the bid side. So that suggests that this was being sold, and selling a put is bullish. And we did in fact close on Thursday the 17th at 1923. And so this was a good maneuver for them to get out of that position because it went to zero, because we closed above 1650. Same, actually not same with this one, but they sold this. So that is, bullish. Selling a put is what the bid suggests, that it's, bullish. All of this bullish here. So that looks good. Same with this one. Selling this. This is for August. This is for August. Selling these puts, that's bullish. And then one other thing I wanted to do before flipping back over to X real quick is I just wanted to expand this search criteria to be the past, all of the days. And do we have some other big orders? Hey, look at this. Wow. 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 What we see here is on the 9th. This is not that interesting because the size was less than 500. But on April 10th, we see ask, so that's bullish, suggesting buying of a $20 call. That expires. Oh my gosh, this is the one I was just talking about. Or no, this is not the one I was just talking about. The one I was just talking about was the $25 call. Oh my gosh, Unity is getting stacked. $20 call expiring January, 10,000 again, 4.4 million. Oh my gosh. This is, looking really good. And so let's just make sure that from the 10th, we got an alert here. This trade was part of a flow alert, click for full context. And this was also, trade was to open. So that does suggest that this is bullish on the ask side, buying to open. So let's just look at this contract, 4.4 million. That was on the 10th. And so let's filter this to the 10th. We can see going back, let's see, 90 days, nothing really relative to that in the past. And then just looking at that one day, 10,000 candle volume, 10,003, $4.4 million. Let's just scroll down here on the 10th so we could see that open interest was 8,000. Saw a volume of nearly 11,000. Volume increased by 10,000 to around 19,000, just a little bit below. Where is it at? Still, around 18.9 as it was back here. So this is still open. Then if I adjust this to be the 17th and go back the past 14 days, we can see that little candle there. Actually, 1, 2, 3, 4, 5, 6. I could do 7. I could have been doing 7 this whole time. Dang it. So we can see here that big spike there. We haven't seen a selling of this. So $20 call to January, 272 days to expiration. This is where, these get expensive. $4.38 was the average fill on Friday. Their average fill was $4.40. So still around the same price to get one of these contracts. This is, this is unusual. And this is bullishly unusual. Unusually bullish. So that looks good. And then we see some more. We don't see any more 10,000 contracts, but we do see a 5,000 order being picked up on the 11th. This is a put. So this was a good move for this person because this suggests that this was to open. So it seems like they sold to, let's see, they were selling some cash secured puts, maybe. I'm not sure. A little tough for me to understand the nitty gritty of contracts, or at least I'm not at that level yet of understanding. But this was the $15.50 put that expired on Thursday, on the 17th, and they were selling, so that was a good move, I'd say. Because it closed at 1923, so above that, so that was a good move, 5,000. So yeah, but that seems really good. And then so coming back to this post, just to kind of summarize, my impression is that it's net bullish for the next 1 to 2 months. So really leading up to June 20th. And that's what I said here. Likely not beyond, because I suspect at that point that IV, or implied volatility, will be needing to cool down at that point. And so for holding shares, sure, probably safe bet long term in my view. But there would probably be a cool off, a pullback, and the premium on contracts at that point after June 20th, or maybe leading up to June 20th, would probably be cooling down. And then there's also a bit of hedging mixed in, and that could be just corresponding with the max pains here, being 18 for this coming Friday on the 25th, being 19 for May 9th, and then being 17 for May 23rd, as well as 19 for May 30th. So I think that we're probably going to be seeing price action below $20, and so might as well hedge a little bit by selling some covered calls. If there's going to be a pullback to 18, 19, or maybe even 17, those would be dip buying opportunities in my view, is kind of what I'm thinking from that. And then as all 10,000 positions are still open, and additionally, we are seeing another 10,000 contract position being open at $4.4 million from April 10th. So looking really good there. And then since there were so many 10,000, I'll highlight this. Since there were so many 10,000 orders, this makes me think they could be made by the same trader, just having a similar trading strategy. And I like the tin foil that it's Roaring Kitty. And so I'll dive into a little bit of evidence from that, potentially being Roaring Kitty related. But then also, Treehouse, and this is Treehouse Brewing, which during Roaring Kitty's last stream, he held their green can, which couldn't see because of his green screen. But their green can, Treehouse posts a lot of the green cans, maybe corresponding to when GameStop's bottoming or about to rally or something like that. Again, this is like tinfoil hat theory. But then they also have this Unity beer. And so Treehouse Brewing, the Wanaka tree featured on Unity, holds a special meaning for us at Treehouse. It anchors our annual journeys coming back around, maybe with GameStop, maybe with the memes moving like they did last year, to New Zealand. A steadfast, reassuring presence, quietly resisting the pull of the squeeze of time, even as it inevitably yields to change. So maybe this time's going to be a little different. Unity is an absolute crusher of a stock, pale ale, brewed entirely with Nelson Sauvin hops, which we hand-sourced from New Zealand. So this beer is lighter than air, floating up, while totally saturated with these special hops. It has wild aromas of gooseberry, crushed grape, and citrus peel. Squeeze. So, I don't know. I like this. And so a lot of the tinfoil on Treehouse, Unity, and, the green can comes from the Bronx Viking. But one thing, I did get some comments on this post. Let's see. So show probable spam. So I didn't think I was actually responding to this guy. I don't know who he is, but, and so, I was just saying, in Roaring Kitty's last stream from a year ago, Roaring Kitty mentioned Treehouse because I think his buddy owns it or works there, and the beer he drank during his stream was their green can. Whenever they post the green can, GameStop is bottoming before a rip. Not really sure, major tinfoil, but it's fun. And so, this is their last post on March 10th when GameStop was kind of starting to bottom before they moved up about 25% or so. And this guy responds, love it, grokked it. Also, see if what connections there might be. Saw similar. I do think with all his other posts leaning into literal use of Unity, the stock profile matches his thesis, and this tie-in, it's a little more than coincidence at this point, in my opinion. LFG. And I say, also the U falls on the guy's head, LFG for real. And so let's just open this up so we can see. And so, there's a sad dog, Panucci's Pizza. I don't really know the origin of this. I think it's like Family Guy or I think Family Guy, Simpsons, I guess. But what we see in this, and this was pointed out by the Bronx Viking, is that, there's going to be a nice little couple coming up here on kind of a fall day. Let's see, wait for the couple. I guess in the next season, winter, the dog's still there. He's sad. He's GameStop. Now there's this couple that it hits the guy in the head. Unity Software. So, there's something there. And then just to look at some more of his posts, this is the one that we just went over. Unity, Rick James, B. That's his ring right there. It says Unity on it. What is in the box? This looks awfully similar to, their logo here. So, I don't know, tinfoil hat. And then also Time Magazine cover. This is the U cover. U. And also lots of tinfoil around this. Time here. 1 minute 1 minute 9 seconds would translate to 69 seconds. Some stuff related to GameStop with that. I believe that Buck the Bunny posted a video that was 1 minute and 9 seconds long about his return. And then 420. 420 is upon us. It's tomorrow. And so maybe that's related to GameStop. Maybe that's related to Unity. Maybe that's just related to meme stocks. I don't know. I've liked all of these before, and the likes go away, I guess. And maybe he dropped Chewy and started looking at Unity, in addition to GameStop, of course. So, he still has this pinned tweet. That's all for now because I'm out of breath. For your information, here's a quick 4-minute video I put together to summarize the GameStop bull case. It's followed by some other deeper dive GameStop videos. He hasn't removed that pinned tweet. I think he's still bullish on GameStop, but I also think that he might be bullish on Unity Software. This, to me, does make me think it is a deep effing value, which corresponds with a Roaring Kitty style of play. And I think that we could be heading up here to test the neckline in the next 1 to 2 years. And between now and then, I definitely think that we could be getting up to 20, where we're at now effectively, 25, 30 corresponding with the strikes. And I think that we could be going beyond those levels, potentially squeezing, whether it's up to 30.88 or maybe 45 around there. So, if we are going to see like a repeat of last year, and we didn't even really see that with Unity, did we? Let's see. Last year, what did we see with Unity? May of last year. Yeah, we didn't see much. So maybe there's something different going on this year. Not only maybe we see some moves with GameStop, with AMC, but I think that Unity Software, in all honesty, just looks phenomenal here. And if we are getting dips to 19, 18, 17, corresponding with those max pains, I think that those are going to be dip buying opportunities, whether for shares, contracts. You do you manage your risk the way that you want to. For me personally, I'm excited about the possibility of this getting moves up to 25, 30, and maybe into the 40s in the next 1 to 2 months. I don't think that they will be sustained. I think that we will see a pullback, but I also think that we could be getting rejected from 30 again. And so I will have a plan for that. And maybe then we flip this orange uptrend into support, kind of like how I have doodled here, but time frame levels, I'm probably all off with them. But yeah, I mean, I'm just super stoked about this. And I'm really excited to see that there's another contract, that $20 call that expires in January, that also has another 10,000 position opened on it. So I just think that that's super, super exciting. And so, as always, with that being said, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. And so, yeah, I will release that as a video after that. That's probably going to be pretty long because I think I spent like an hour diving into that, but hopefully just a lot of valuable information for the holiday weekend. And I will, let's see, pull up the chat here. And so let's see, following up on that, sorry for the long thing there, but just trying to, 2-for-1 with the stream. Wow. Hydro Hustler has some comments in there. And so let's see, I need to, what am I doing? Open up the watch lists here. And so, and then I will just adjust this. And I may not, oops, what did I do? What did I do? I don't want to save anything. Okay, so that's still good. So I'm just going to adjust this to match that. Okay, and so Hydro Hustler saying good morning. Good morning as well. Still morning where I'm at. And he's requesting Hertz. And then thanks, Horacio, for letting Hydro Hustler know. He's saying, hey, Hydro, he hit his comments to talk freely without distraction while he talks about Unity. He said he'll go back to the comments in a bit. Thank you, Horacio, for clarifying that. And then I will put up Hertz here. And then also Spy, I can do that as well. And then I see Benjamin, what's up, FLNC. So that comment was from 50 minutes ago, so hopefully you're still here, but I can definitely pull that up. And so I might try to go over the comments that Horacio had a little bit earlier, and I'll try to go through them kind of quickly because I would like to get a video, some more clips out from that poll that I did. I don't think I'll get to SoFi, but yeah, so Horacio was asking for Riley, so I'll pull that up. So this one, 316. So with this, I mean, I would say, and I could do, this is a lower low, but it does look like, the closes we're expecting, a little bit of an uptrend. So I think it's maybe a little bit good, but this massive wick to the upside, tons of sellers here. So, big volume going up. So that's good, but it didn't really go up that much. And what I think would be, really good to see is close. I mean, just from this wick high over here, we couldn't get a close above 323. We couldn't get a close above this wick high here, 344. And so those are levels I like to see closes above. We wicked above both of these levels, but got rejected. So people had sells there. So those are barriers to the upside. And, but, the way that the MACD is moving here, it's like kind of like, maybe to zoom out, we can maybe see that a little bit better. But, it's like, oscillating between red and green, and then it comes back to red. Maybe it's going to go green, but it pulls back. Maybe now, though, it will be going green. But I feel a little bit concerned about this because of, we look at the 10-minute time frame. What happened there? All of this volume as it's going up, and then it really just kind of pulled back. So went up 3.27% on Thursday, but but open was 308 and it closed 8 cents above that. So yeah, I mean, let's see if I go back over to the daily, maybe I could do a fib retracement. Oh, I was going to do some fib retracements on Unity, which I forgot to do. And so let's see. Yeah, before I... Actually, yeah, who cares about the fib retracements? I'm just going to do this real quick. This would be a fib extension. I'll be suggesting a move to around 32 for Unity. So that's just a fib extension from the low here, August 6th, around August 5th probably, and then beginning of April up to that high that we hit in March. So that's that fib extension. We see the 100% move, which is basically just the distance from this low, 1390, up to that high of 3088. Taking that same distance from this low over here brings us to around 30. And then if we also scroll up, the 1618 brings us to around that neckline. So I find that to be a pretty compelling level there. So I will probably add this to the video on Unity. So I'll just throw this in there at the end. So hopefully that's helpful. Sorry I missed it. I forgot though. And let's see. Yeah, now coming back to Riley. So this Fibonacci retracement here, we do have, we're above 312, 313. So I'd like to see it hold above 313. We did fill this gap that was here. So that's good, but yeah, I mean, I could see this. To be honest, I think this seems pretty weak considering that it was just sold at these, levels here. So really need to be getting closes above this red line. And let's see. So how do I want? Maybe I do this one yellow and I should do this one green because we need to see closes above that level. But then to the downside, yeah, I mean, I don't know, $3, maybe it could be pulling down to 3. But yeah, I mean, I don't know. Riley B Financial, this is a diversified financial services company, capital markets, wealth management. Yeah, I mean, I don't know. So for me, this, yeah, I mean, because this is like over here, like was the market, the financial sector of the market making all-time highs, in this time frame? Yeah, we were making all-time highs in the SPY in this time frame. So let's just zoom in here. The SPY all-time high was on February 19th. And so Riley, February 19th, it was going low. It was kind of inverse to the market. But this is, going to lows as the market's going to highs. Over here, highs, April 26th of last year, whereas the SPY. So maybe this is maybe Riley is a good inverse play. But it just seems to me like this is going to trend to the downside. So, I mean, for me, like my inverse kind of plays are probably just going to be like trading the UVIX, which I do go over in the Ticker Request Lives, or sorry, not Ticker Request Lives, the pre-market preps. And so, yeah, so I don't know. No comment on this, whether long-term, short-term, I have no idea. But then, and then since I did mention SPY, I mean, I think that, just like with Unity, SoFi, as Bronx Viking was pointing out, this looks like a bull flag. I think that we've put in a short-term bottom, and I think that we're probably going to see rallies. So, the SPY potentially to fill the gap up here around 565, that could be happening. And so that represents an upside move of around 7%. Are we going to be getting to all-time highs? Maybe. I mean, it's possible. And I think really just like in line with the Bitcoin 4-year cycle, I think Bitcoin's probably going to be making all-time highs later this year between May and December is my thesis. And so with that being said, I think SPY could be hitting all-time highs, but also I think that Bitcoin could be hitting all-time highs while the SPY does not. But yeah, I mean, I think that short term we're going to be seeing a bounce. Maybe it brings us to all-time highs. Maybe not. I suspect not because of just how volatile the markets have been. I think that we'll probably be bumping into some resistance. But I will be covering this every day during pre-market prep. So make sure you check those out for my thoughts on SPY, the markets in general, focusing on the volatility, S&P 500, Bitcoin. And I also do cover uranium, but I might kind of venture away from that. And so I will come back to Benzi, which Horatio also requested. This did have a reverse split, 1 for 50. I think that, if you're trying to diversify, I think that Bonsai International, let's see what kind of company this is a marketing technology company that provides artificial intelligence-enabled marketing and sales solutions for businesses of all sizes. Market cap is $16 million. That's pretty small. I mean, I'm a pretty small size trader. I'm sure that some people who tune into the channel deal with, $1 million or so. I don't. I'm in the tens of thousands at most kind of trader at this point in my career. Portfolio size, not position size. Actually, maybe AMC, I could make that case. But, as far as millions of dollars goes, that's really not that big as far as trading goes, investing. And for a market cap to be around 16 million, I think that this is probably going to be a losing way to diversify. And one thing that I find kind of interesting is it's like, oh, well, I'm going to lower my risk with this position and get out at break even. And then so I can move into this other position that I then lose money on, something like that. So it's like diversifying could also be like worsification, where, that's a term from, let's see, I forget his name. I should have the book up here on my desk. I want to say it's not Larry Fink, but, the one up on Wall Street, whatever his name is. I forget. But, he talked about a company diversifying. And so it's like, I've got a company that focuses on this, but I'm going to diversify by focusing on these other things as well, spreading myself too thin. That ends up being diversification. Or worsification, I don't, whatever. And so I feel like that could kind of be, with diversifying a portfolio, that could also be, spreading oneself too thin into positions that, are probably just going to bleed. This is around $1. They, had a reverse split less than a year ago in September, a 1 for 50. And at that time, price went up to $11, but then it's come down to $1 again, hit a low of 73.5 cents following that reverse split. So that makes me think that their reverse split didn't really work. They're still bleeding. We do see that there are lower lows clearly formed in the stock price, whereas we have higher lows in the RSI. That is bullish divergence, but I think that this is probably just going to bleed. And I believe this was mentioned by Quoduo during a stream. If you go back 2 years and a stock price is above $1,000, they're diluting too much. And so let's go back. We are now looking at April 19th, 2025. So let's look back to April 19th, 2023. And we can see that, they looks like they just became listed at the end of 2023. So we can't even go back 2 years. But we can see that less than 2 years ago, it was at $825.50 a share, all-time high. And 1 for 50 reverse split less than a year ago, and it's now back to $1. I think this one's probably going to zero, in all honesty. So I don't think that this is in my opinion, could be wrong, maybe this is a good way to get a squeeze or something, but I don't think that in this kind of market, that's really like the safe way to play, because it's like maybe something goes like this and gets you a 300% move. But maybe it goes from there and, drops by over 50%. So I think that this is probably, the risk is greater than the reward. So this is not one that I would want to be in. So yeah, because like for me, the way that I'm trying to consolidate my portfolio is to move into plays that I have higher conviction in that seem like they have a lot of fundamental value. And I feel like that would be more like a GameStop, believe it or not, Unity Software, believe it or not. And then also some other ones, I'm not really sure. I've really just been more focused on those the past couple of weeks, to be honest. AMC, to be honest, I just kind of want to get out of my position at around $10 a share. I've just been underwhelmed by it. I think that it will move relative to, or in concert with GameStop, Unity, stuff like that. But I just don't think that the CEO has been doing the best. And, I've been trying to be a glass half full type of position with it for a while. And it's just an opportunity cost. And, the debt's not being paid off fast enough in my view. And so let's see, there's some more. Horatio, yeah, no problem. So that thank you for sticking around for the stream. And that's so like for me, and I think that an important thing to think about, if a stock's trading around $1, it's like, okay, but what's the market cap? 16 million? To me, that's a lot of money. I'd quit my job if I had $16 million. I'd quit my job right now. I quit my job if I had $1 million, that'd be a dream to me. But, for a company, this is not, an individual. I'm an individual. And I don't have family or dependents, that I need to be taken care of. I don't even have pets. So I am very free. A company, you have a lot of dependents. Not only those dependents are employees. Not only do you have those dependents have dependents. They got family. So, 16 million is really not that much, especially if this is, a marketing technology, AI. They're going to need a lot of money investment in the infrastructure for that, compute, all of that. That's expensive. And I feel like the way that AI works is that, and this, I think maybe Bonsai is one that falls in line with this, kind of like the dot-com bubble. From the dot-com bubble, there was like pets.com or whatever. I think that's kind of like the big example of, there are a lot of dot-coms that weren't able to keep up, but then there were also the Amazons. And so, looking at this, is Bonsai, a pets.com or an Amazon? I feel like they're probably more like a pets.com. And with this kind of technology, so I think that, with the dot-com bubble, similar to AI and also crypto, you have network effects. And so that is going to be like, do I want to go to pets.com to get my dog food or whatever? I don't know. Or do I want to go to Amazon, which is not just books now. They have a lot of things. And so Amazon was able to pivot into expanding, not diversification, diversifying into not just books, but all of this other stuff. And because of that, they were able to take market share from other companies. And so I think that from what we're seeing now, we will see winners and we will see losers. And from those network effects, from everybody just being like, oh, I just buy it on Amazon, rather than saying, oh, well, I just go to this blah, 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 blah.com. This is I have to type in my password for that account, all this stuff. Like we all just started using PayPal. We all just started using Venmo because it was just like a unified way. There was a network there. If I owe you some money, I can just Venmo you. PayPal, that was linked to eBay and Amazon and all this stuff. So, it's like there needs to be like a network for this. And with AI, that is building like a neural network of this AI compute. And the companies that are building that up, like look at what's happened with XAI. Oh my gosh, with Grok. It's throwing ChatGPT under the bus, man. And that's why I think like never bet against Elon Musk. I mean, if you don't want to bet with him, if you don't agree with him on some things, sure, that's fine. But don't bet against him. And so I feel like he has demonstrated through his company, not him individually, but the teams that he has behind him. He knows how to seek out the best talent. You know, just like Steve Jobs. Steve Jobs was the conductor. Elon is as well. Elon is also very tech savvy with the engineering, hyper focused. You know, he solves problems like no other. And so I think that if XAI might be throwing ChatGPT under the bus, running them over multiple times, Banzai has no chance. I think that then there are other companies, though, that do have some potential angles. I've covered Big Bear AI and SoundCloud AI. Maybe those will be winners. I'm not really sure, but I guess I don't want to dive into them here. I do have small positions in them, but I don't necessarily plan on, to be honest, I have a stop loss on SoundCloud, SoundHound. See, I mean, maybe that's a downside of it, that it could be confused with something else. But looking at Banzai International, market cap of 16 million. What's the market cap of Big Bear AI, which is, also, not a ChatGPT or not a XAI or Gemini, whatever. Market cap, 731 million. So they got some capital to work with. Let's look at SoundHound. 3 billion, so they got a lot of capital to work with. Banzai International, no, because there's a possibility that SoundHound, there's a possibility that Big Bear AI, that they get left behind. They're beat out by XAI, Google, Microsoft, ChatGPT, all of these mega corporations. Maybe these get beat out by that, but maybe these guys have angles. And so thinking about that with Banzai, I think that this is a part of any AI bubble that might burst, go to zero. So if one wanted to get into AI, for me, I mean, I have a small position, so I'll just, small positions, and I mean by that, like, I'm risking at most, I think, $200 on each of these. Big Bear AI, I have a call and some shares. Maybe this one I'm actually risking maybe $300, but still less than $1,000. What I see with this, look at TradingView. I had kind of copied some past trading in the past to look over at TradingView that might suggest where this is going. And so I could do that, but I don't want to take up a bunch of time. But I have this alert here at, $2.22, I believe. I feel like this could be coming down a little bit more, really just taking its time before a big move up. And so I personally have, I'm just going to pull it up on my phone so I can share with you what I have, and not suggesting this as a recommendation because I am definitely underwater with it. So for me personally, I have 6 shares, so very small position, like I said, at an average price of $3.94. And I have a limit buy at $2.22 for 1 share. But I, in all honesty, might remove that because I want to just focus on Unity for this upcoming week. And that's not to say that $2.22 is a lot of money for 1 share, but it's a diversification of my focus, my attention. Last week, I only focused on GameStop. This week, I might only focus on Unity with a little bit of GameStop, maybe some other things, maybe leave this limit buy at 222. But really, I think that there's just a lot of time between now and the upside with Big Bear AI. And so the reason why I have a little bit of attention still in this is because I have a $10 strike call that expires in January of next year. We're well below that. I bought it at $1.20. I have 1 contract at $1.20, and that is currently worth 25 cents. So I bought it putting $120 on the line, and now it's only worth $25. But it's like, well, when do I want to get my average down, or do I just want to cut losses? I think that it could go back up to $10 around here in the next year. And that is really just based on a number of things, but the time frame, let's just look at TradingView. I think I probably still have Big Bear AI up here. Yeah, this is this pattern over here, I believe. No, I think it's from this. It's this. I don't know if it's a bar pattern or what, but it's what the lingo is for it. But it's from here to current price. I've copied that. And so I think that by you can't see it, it's behind me. By January of 2026, I think this could be up at 24, 25. I think that this could definitely get up to 10 again. So I think that my call will go in the money, but I think that we've got a lot of time between now and then maybe the end of the year before it's around $10. And so I could be buying around $25 for this contract, but I could also wait. And with contracts, time is very important. And so I feel like probably by July, that is when I would want to really aggressively get my average down. Because let's say, it's $25 now, and let's just do a little bit of math on this. Okay, so a little bit of math. So I've got one contract that cost me $120. And let's say I buy another one at $25 now just to get my average down. So now I'm risking $145, and then I divide that into 2. My average is now 72. That's still a lot higher than what it currently is now at 25. And so let's see, let's say I got one contract at risking $120. And then let's say I wait for 10. Or for it to come down to $22.22 share price. Let's say the contract price is around 10. And it's actually hit a low so far of 19. Let's say it comes down to 10. And let's say rather than buying the one at 25, I buy 2, or let's say 3. I get a little bit generous. I buy 3 at $10. So now I'm risking an additional $30. That's $150. So 5 more than I would have been risking if I just buy one more contract at 25. And so I take this $150, I divide that because I now hold 4 contracts, divide that by 4, and now my average is around 37, which was, $145, divide that by 2, $70. So yeah, that's, let's see, 150 divided by 4. That's a much more manageable average to be working with. Maybe it goes down to 5. And so now let's see, I have 150, 4 contracts, and then let's say it goes down to 5, and then let's say it goes down to 5. Okay, now I don't think it's going to go much lower. I'll put 50 more bucks on it, okay? And so that's 10 more contracts. So I had 4. Now I'm going to add 10 more 150 plus 50 more dollars, 10 more contracts, $200 risking on this now. But how many contracts do I have? I just added 10 to my 4. And so now I can divide that by 14. And now my average is 14. And if that's over here, and it does go up to 10, that's how you can make some money on this. So I'm just chilling on that. I'd be reducing my call average from $1.20 or $120 risking per contract to $14 risk per contract. So, that's, I think, what I would like to be doing. And then with SoundHound, I don't have a contract in this. I do have a larger share position in it, just to be completely clear. But SoundHound, I have 3 shares. I got it $9.78. But I do have a stop loss now just below this 786 retracement at 608. I have a stop loss at 6. I'll get out of my 3 shares. That'll suck, but it's only 3 shares. And yeah, I mean, I just don't want to be holding this forever. It's just spreading myself too thin. And then also, you know, if it breaks below 6, then hey, there's this downtrend, maybe that act as support. But then, you know, it's like, how long is it going to act as support? Maybe this bleeds for a while. If this market cap is $3 billion, whereas Big Bear is $730 million, you know, if this can come down from up here, so let's see, 250, so let's see, 700, let's do some more math, going up to 10. So let's see, for this, 730 million times 4, so getting 250 back up to 10, times 4, that was almost 3 billion. Not so different at that point relative to SoundHound. So I think that SoundHound could be coming down more. I think that Big Bear has more upside potential. We've seen a massive drawdown from up here, 77%, whereas with SoundHound, let's see, probably similar. Yeah, 72% or so. But yeah, I mean, I think that these are other options that are potentially more intriguing, and I would say Big Bear AI is more intriguing to the upside, but also this could go to zero. This could keep bleeding. And another one that I think is good for an AI play is, in all honesty, Tesla. Tesla does a lot with AI. And so I think that they're kind of, you know, everybody's just like, it's a car company. It's a car company. It's not a car company. It's way more than that. So, yeah, I think that these are better alternatives than something like Bonsai. But yeah, I will continue on. I think Hertz was the next one on the list from the chat. And so this, I think that there's a pretty big move. Earnings is coming up. Let's see. I mean, over here, got a good amount of consolidation. So that might be acting as some resistance. 14. Just out of curiosity, where's that correspond with over here? I mean, maybe a little bit of a downtrend here. And we broke above that. We closed the week above that. Where could this be going? I don't know. I mean, after such a move, over 100% move to the upside, 160% upside with earnings coming up, I feel like that this is a good time to take some risk off the table. Up 44% on Thursday, pulling back 6.5% in the after hours. And so, I mean, I could see this doing something like this, but I could also see it doing something like that. I try to make it around earnings. So, I mean, I think that this could keep going, get some more late bulls on board, get this up to double digits, and then earnings comes out. And hey, I mean, let's think about Hertz guidance. Yeah, I mean, Bill Ackerman endorsed them, I guess. And I mean, I'm sure that we'll be getting some posts from Jim Cramer about, you know, Hertz, how can you go wrong with it? You know, I feel like this is not the likely scenario. I think that this is the likely scenario. I I think that there will be some more upside late bulls, but getting into this, I think that it will probably get rejected. Maybe see a high over here around 1072, corresponding with the high over here. And yeah, that would be like late bulls getting on board. Hey, it's just going to keep going up. It's just going to keep going up. And then, yeah, like think about guidance. Are we in a possible recession? Are people traveling more? Like if you're European and you hate the new administration of the US, there's a lot of fear regarding deportations. Or maybe you like the new administration, but still there's some fear of deportations, don't really want to be traveling to the US right now. People are getting a little bit concerned about the economy, whether that's in the US or globally. People are going to be spending less money. If they're traveling less, whether international or not, they're going to be renting fewer cars. And so I don't expect the guidance for Hertz to be that great. And so I think that, following this very recent, over the past couple days, upside move of potentially a 200% to the upside, I think that we could very easily see, basically a 50% drop following earnings. So that's what I would think, that there's probably still some more upside with late bulls, aka bag holders. Hey, we can pump this a little bit higher. I'm a market maker, hedge fund, or whatever, big firm. Hey, we can pump this a little bit higher, get those last retail traders to be buying, thinking Hertz is, it's never going to stop going up. And then it, dumps after earnings. So that's what I could see. And so I guess what I will do, I'll put an alert at 6. That's what I think. How does that line up with my doodle? Maybe I'm a little rigid there, but I think that at this point, from current price, let's just do a measurement up to from current price. 23% to the upside with a risk of, in my view, 30% to the downside. I don't think that's a good one. And, FLNC, I'll do that. Sorry, Benjamin, if you've just been waiting this whole time. Been over an hour, dang. I need to eat some food. My stomach is, I had a little bar before eating this, but I didn't eat my normal breakfast. I didn't think I'd dive so heavy into Unity. Oh my gosh. FLNC. Yeah, I think that this is doing, for sure what I've doodled out here in both of these white arrows. The yellow one, not sure. Hit the low on Thursday of 349. With that, maybe that's a bottoming signal because there's a bigger wick to the downside. But volume, not too high. I think that, we will be seeing a rally in the markets in the next week. I think that the 3-day weekend, people are, panicked or concerned. Things are going to keep going down. I actually think I might make some money on my SVIX position, shorting the VIX. I think that things are going to rally. FLNC, I don't know if it's going to rally. Did close on Thursday at $3.69, so maybe that's a good omen there. But I that's always a joke. I don't think that stuff really matters. And if maybe it's like, a market maker or something, it's like, we'll close it. Hey, market cap 669 at 92. Another 69 there, we'll do that because then people will, degens, or retail traders will think, hey, 69, I like it. I like it at this level. But yeah, I think that this is probably, so since I started covering it over here, what has it only done? So I'll just do it from the break here. It has only gone down, even with the high close today. It's only gone down 30%. It's gone down 30% from there. So yeah, maybe it's the bottom, maybe it's the low, but
I think the bearish scenario is played out, and I think it probably will play out because there's just a lot of uncertainty in the markets. Maybe we get a rally in the SPY, and then FLNC, goes up to around, 5. And then I would think, like over here, if no V-shaped recovery and closes week below 496, which it did, then likely to continue down. It did continue down. I think if it does bounce to 5, I don't think it'll get to 5, and I think it'll continue down. So yeah, I mean, I think that this is probably going to continue the trajectory to sub 3, I should say. Where is it going to go? I have no idea. But I think that it's probably going to continue lower. And it looks like they're reporting earnings on May 7th. So maybe it continues to bleed, and then earnings, there's a pop to 5. But I think that, I mean, if this continues down before earnings, I would say whatever pop that happens, whether that's to 5 or lower, I think that's an opportunity to exit, in my view, because, yep, I think that there's just a lot of downside risk. And really, I mean, like looking back, like this light blue line, that corresponds with this low over here. And so that's a prior level that was support, pretty notable support, because following that, let's see, I guess I got to put it on the weekly. Following that, price went up 500%. But then now back at that level, that's going to now act as resistance because we're below it. So I think a bounce to 5 probably get rejected there, and that would really like be solidifying. This is probably just going down. So any bounce up to 5, I think it's good to take some risk off the table. So yeah, hopefully helpful with that. And I might, let's see, go over some of these other stocks. There's too much to go over with Rivian. So I'll probably try to do another video later today or maybe tomorrow morning. Tomorrow's Easter though, and I wanted to do an Easter video. But I need to take a break from streaming because I need to eat. But USAR. So I'll just go over this, and then I'll probably end the stream after that. I'm just going to hide the chat, but I will open it up at the end of the stream. I just wanted to make a clip for this. And so, yeah, I'll do that. I'm just going to have this post over here. So I'll just mention that, and then yeah, I'll make this little video. Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of ticker symbol USAR, which is USA Rare Earth Incorporated, which closed on Thursday, April 17th at a price of $14.09, being down about 10% on the day, putting in a bearish engulfing candle there, engulfing the open and close from Wednesday's trading. So not looking so great there. Does seem like we could be putting in a topping signal here with the big wick up on Wednesday hitting a high of $18.55 before closing at $15.66, right around, in the lower half of the trading for that day. So that does make me think that that is a topping signal. So we'll have to explore that a little bit. And I have to say the reason why I want to be covering this is it does seem like it was popular on X a few days ago, probably because of the big upside moves. And a couple days ago, I did put out this poll. Plug ended up winning. So I did put out a couple videos on Plug Power. And so now I just wanted to do a follow-up with this poll, go over USAR. I will try to get out videos on AMC and Rivian as well. But I got to start with the second place winner, which is USAR. So here, looking at the charts, did mention that I do think this looks like we might be putting in a top, and that's really just corresponding with, the low here, 556, going up to that high of 1855 or whatever it was. I said, 1855, up over 200%, over 230% over the span of 20 calendar days, just 3 weeks, 14 trading days. So really, 3 weeks with the holiday week. So, that's a pretty massive upside move. And I think that we could be seeing a little bit of a pullback. Where could I see this pulling back to? To be honest, pretty clear. Looks to me like maybe the high from April 4th was at a price of $10.05. So I'm just going to, lock that into place. And I'm going to make this yellow. Maybe it's a dip by level, but maybe we do go lower. We really want to see some other lines that kind of correspond with or suggest with that being a retracement level that would suggest that is a dip buy zone, because maybe we do pull down to 1050. That did correspond with, let's see, on April 8th the highs was 1057, the open was 1050. So maybe that is going to be acting as support, but just below there we do see quite a bit more consolidation. And so maybe like the dip by green level, I'll make this a thick green line to correspond with that. That might be 850. And that corresponds with the open price from April 4th when we did hit that high of 1050. So both of those levels based on that same day. And then we did consolidate just below that level. So any consolidation below, that's potential buyers that would buy the dip. So I could see that acting as, and actually maybe, got all this consolidation over here around $7. Let's see, what was the high from March 26th? The high was 709. Yeah, so I'm actually going to add another level, and I might adjust the colors here. So the high here, 709, right around $7. So I might make that, a thick green line, not to be confused with this one. So I'm going to make this one yellow, and I'm going to make this one red. And so those are levels that I think that this could likely will be returning to. And we could also see that, based on this prior stock price doesn't have really much of a history. What we can see is we do have, lower highs in the stock price. We also do have lower highs in the RSI. So there's no divergence there. That would be bearish divergence. So that is a good sign. So I think that we can be happy about that. What we also see, though, which is maybe not so great, is when we didn't have much volume over here, we saw that high of $20, and maybe that's, a red line level to be saying, that would be one that I think is probably going to be acting as resistance. Double top up there. Look at all this volume that we have behind these upside moves, and we didn't even get up to that high of $20. So that makes me think that there's a little bit of divergence in that sense, while not with the RSI. There is with the volume. We have a lower high, but a lot more volume. So all of this volume can't push this up to 20 or above. That makes me a little bit concerned. But if we do push to above 20 and the RSI is below the high over here on Pi Day, March 14th, was 76.19. If RSI is not above 76.19 and stock price is above 20, that would then be bearish divergence. I think we'd be seeing a pullback, but I think we're already starting to see signs of that pullback. And so I can draw, let's see, a trend line from over here. I'm going to do it from the, open from Thursday, which was at a price of 1633. Just going to make sure that those levels are correct. 1636. I want to make it 1633 from that open, and then 20. And so maybe there's, some resistance there. I could see that. Did get a wick above it, but close below. Open to add it. closed below, bearish engulfing candle, does make me think that there's going to be some resistance there. And then also, let's see, maybe I can do this, kind of want to do this blind. Let's do a Fibonacci extension from the low here, 556, up to the high of, let's see, what was that high hit here? 1057. And then pulling down to the low here, which was April 9th. That low was 772. We've definitely gone past the 100% extension, which is 1226. The 1618, 1536, that's above current price. Maybe that corresponds with the top. It does seem like we have a topping signal there, a potential topping signal there. And I can also add to this the 2618. That will be getting to around 2037. So if the stock price does go higher, if it does go above $20, I think that there most certainly be some resistance there. So I would be cautious of that. And, to just kind of clean up the chart, since we are above the 100%, I'm going to leave that there. But I think that, you're never going to sell the exact top. And so maybe that 1618 extension is, that, not selling the exact top. Because, got to push it a little bit higher to have some bag holders up here. And so I could see this retracing, maybe, like I said, to 1050, if not lower. And so I'm just going to make this a light blue Fibonacci extension there. So some potential levels for us to get to. But I will also do a Fibonacci retracement so we could see if this was the high, if the high that we hit on April 16th at a price of 1855 was the high that we're pulling back now. Where are we going to retrace to? So I'm just going to do a Fibonacci retracement from that low of 556 to that high of, what did I say it was? On the 16th, 1855. And so I'm just going to make sure that's right. 1855, 556. So that makes sense. 1205. I don't really think that's a significant one. So I'm going to adjust this 50% retracement. I'm going to remove it. We got that 618. Corresponds, coincidentally, I don't know, pretty nicely with 1050 being that orange line that I've drawn here, which was the high from over here. And that is at 1052. The high over here was 1050. Confluence, lots of support there, but that's an orange. So maybe we go a little bit lower. And so I've got this yellow line here at 850. The 786 from that Fibonacci retracement is at 834, a pretty nice confluence of levels there. So I could see this pulling back to that. The green, 7, I think that's probably getting a little bit greedy, but I think it could happen. So I think that even if this goes up to like 2037, whatever it is, I think that this is probably going to be pulling back, maybe finding support, with this downtrend. If it does go up, maybe it pulls back, finds support at the downtrend. Maybe that's a 382 retracement from that at that point, but that hasn't happened yet. So let's not assume it's going to happen. Let's work with what we have on the chart. And so that would be suggesting a retracement to either 1050 or 850, somewhere around there. We also do have this gap here. And so the closing price on, let's see, April 14th was at 1175. So I'm just going to make that line a little bit thicker so we can see it clearer, make it dashed so we know it's a gap that's not been filled, and make it blue. But with that being said, we also have another gap. The closing price on April 11th was at 831. So I'm just going to make that dashed again, make it thicker so we can see it, and make it blue. So we also know there's a gap there. There's a lot of confluence, is what I'm saying, at the 786 at around 850, at around 850. But maybe all of this confluence, a lot of people have attention drawn to 830 to 850, maybe 869. They want to have fun with it. Say, I'm going to wait until there. But then they get left behind. I think that's possible. But we also have this gap down here. Another gap That's from April 3rd. The close on that day was 650. So I'm just going to make that a dashed line gap. That's another gap to the downside, but maybe that is then one that people get too greedy with. Also, this green line around 7, maybe people want to buy it $6.90, 69, have some fun with it. Maybe that's what people are waiting for, and those people will be getting left behind. People, are going to lose conviction as this goes lower. And I think that's going to be where the opportunity lies. Sub 1175, I think this gap's going to get filled. I think realistically, this is probably going below 1050. I think 850, maybe 869, dip buying levels. And before I forget, I just wanted to pull up the moving averages out of curiosity. Hey, where are those moving averages? So we got the 50 in yellow and the 200-day in blue. And those are at, let's see, the 50 is at 1075. The 200 days at 1104. Those are just above my orange line there at 1050, just above the 618 at 1052. A lot of confluence there. But we also have the 21-day moving average. That is at a price of 892. And that is just above the levels that I'm talking about here at 834, which is the 786, the yellow line at 850, and that gap fill at 831. And so, maybe this comes down to 9. So I do think that this could go up to 20, but I don't think that will be long-lived. I think that overall, it's putting in more bearish signals. And I think that what we would want to see, if this does go up to 20, that doesn't mean it's not coming back down. If this does go up to 20 and is not going to come back down, or is less likely to come back down to 1175, 850, 1050, whatever it is, what would make me think it's less likely to come down to fill these gaps would be a close above this high at 855. So if we get a close above 855, that would make me think that if we do, I just need to have this like this. If we do get a move up to 20 and then get a close above 855, then I'd think that maybe we retrace to here and then potentially go up. Let's see how that arrow looks. It's a crappy arrow. But that would be if we get a close above 1855. I think this could happen. But as of right now, I think if we get a move, which I think is totally possible, if we get a move up to 20 or 2037, but no closes above 1855, I think that we could get something like this. And then maybe it goes to the upside. And that's a little bit better of an arrow, but it's still kind of ugly. But yeah, and that does, correspond with testing some of these moving averages, filling or nearly filling some of these gaps. So I kind of like that scenario. So, from current price, is there upside potential? Yeah, potentially 40% to 20, but I think that's very risky. And personally, I don't think it's worth it. But maybe there's something there. I think that what is more appealing is to wait for a downside move of maybe 16% to maybe start adding to a position. But really, I would wait for a 25% drawdown to around 1050 to maybe a quarter of a position. Then maybe get up to a 3/4 of a position. That's a 40% drop from current price. Fill in the second gap down here, and then maybe have, that remaining quarter of a position in cash on the side to then add if it does come down to around 7, which would be about a 50% drawdown from current price. But then at that point, maybe it's just breaking down. So good to really kind of evaluate that. But I just find USAR to be pretty compelling in that, USA, investing in the US, mining, and investing in our domestic mining of rare earth elements and divesting from other countries, China, whatnot. So I think that this is a appealing play, a compelling play, a compelling play. But yeah, I do think that after, like I said, this over 260% move to the upside, I think we got to cool off a little bit, and I think that we're seeing signs that is going to be happening. So 1050 down to 850, I think we'll be seeing it, and I think that it's pretty appealing down there, but not just yet. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thank you so much for watching. Take care, you guys. And I was about to hit the stop recording button, but I'm doing this as a stream, so I'm not going to do that. And I will pull up the chat in case there is more stuff going on in the chat. Amphadrew is saying charge point. So all thanks for the comment on the haircut. Yeah, it's shorter on the sides than I was expecting. And it's a little bit longer on the top. I feel like the fade could have been a little bit nicer on the sides, but I like it. I think I feel like my head's kind of round, especially with my kind of curly hair. And so I think this gives me a sharper look. I like it. How does one become as handsome as you? Thank you. I don't know, genetics. I feel like though, in streams and stuff and videos, I probably portray more confidence than I probably have generally. I don't like talking about the channel with people. I don't really like talking about investments, crypto, or really just my ideas on stuff. Politics, it just gets in so many arguments, or just people disagreeing, dismissing. I get dismissed a lot, to be honest, which I find really surprising. I'm pretty highly educated, had a lot of like worldly experiences. I've lived around the US a lot. And I think that I have a pretty valuable perspective on a lot of things. But a lot of people, and it might be because I'm the youngest of siblings, I get dismissed a lot. And so I think my confidence is a little bit lacking. My posture could be better. So I think that I could, thanks for the compliment, I could definitely be more handsome, whether that's in the confidence or the posture. And swinging, I could be making more money on trades and stuff. And I think that would boost it. But yeah, I think I'm trying to bring it all together. I think it's funny, like last year, I had a big hit in the confidence with the mustache, longer hair. I did not feel as confident. I definitely feel more handsome with the haircut and the lack of mustache. Although I kind of like, not the big bushy mustache that I have, but maybe I bring something back to just have a little bit of a stubble stash, something not too crazy. But yeah, so I did USAR, so I will delete that from this list. I have gone over Aqua Metals, and that is that I have gone over BBAI, Bonsai. I'll include this in the DGen Ed list. Fluence, I've gone over that. Hertz, and I don't think I've added that to. So there's that. Highcroft, gone over that, I believe. Riley, I will add that to the DGen Ed list. Delete that. And then Soundhound, I've gone over that. Spy, I've gone over that. Unity, I've gone over that. And so I will pull up ChargePoint. And so this is actually kind of interesting. I do have a position in ChargePoint. I'm not feeling too confident in it. I think it's probably going to go down. And let's see. I have, I think, over 1,000 shares, so I can sell some covered calls. And I'll pull up what I plan on doing. So I was thinking, we hit this low here, 51 cents. I was thinking maybe I'd have a stop loss at 50 for however many shares, probably not all of them, but just to be taking some risk off the table and to be able to have some cash on the side for other positions. Because I just view that like this, and this really came about from that video on LiDAR about can you fool a self-driving car? which featured Luminar, and that I felt like was a very unfair video to Tesla and Autopilot, full self-driving. And yeah, I mean, in the title it says, "Can you fool a self-driving car?" They didn't even have full self-driving enabled. It was just autopilot, and it was actually turned off when they hit the wall. So I think that was just completely unfair to Tesla. And if a company is going to be featured in a video that gets millions of views, that unfairly bashes a company that's been as successful as Tesla, that doesn't make me feel so confident in Luminar. And then that kind of, expanding upon that, that doesn't make me feel really too confident in any companies that are in the EV sector that are not Tesla, because Tesla's just been beaten down so much. And, in that time that Tesla's been beaten down, also in that time that Tesla's been making all-time highs, ChargePoint's just been bleeding. And with it trading well below $1 now, they're going to need to do a reverse split, I believe, by August 6th, because they haven't maintained compliance with the New York Stock Exchange. And in order to do that, they have until August 19th. Otherwise, they'll be delisted. And so I suspect this is going to bleed more. I think that this could go up to $1 around where this alert is. But I don't really think that's going to be happening or in a sustainable way. I think that this is probably going to continue lower. And so what I have done is, okay, so for me, and not that you're interested in what I'm doing, I'm just being completely transparent. I don't know if I'm being completely transparent. I'm trying to be transparent. If I was going to be being completely transparent, I'd be pulling up my positions on the screen. I just don't feel comfortable doing that. But with ChargePoint, I have, let's see, I think 1,800 shares, I believe. I don't think I have any, let's see. I do have a call that's May 16th, expiration at 2:50. I have 28 of those. Those are going to zero, unfortunately. I think I have limit sells at 2 cents and 3 cents to get out at not zero or at not one. But, I think that's probably going to zero. That was a bad trade, lesson learned on it. And so with it at, sub $1, I have a limit sell for 50 shares at 67 cents. We hit a high on April 14th at 63.5 cents. Almost got to, basically this yellow line here, 66.2, 67. The high over here on the 2nd was actually just below 67. And so I would trim 50 shares at that price, small amount of my position. And then I also have a limit sell for 100 shares at 69 cents. Again, small part of my position, but just to kind of trim to get out. But I mean, I feel like this has just been, we had this uptrend in green. We broke below that, then retested it. Now it's resistance. I think that this is probably going lower. But rather than having a stop loss at 50 cents, what I'm doing is I'm going to be placing selling some covered calls. And so I have a limit sell covered call placed that will be expiring on April 25th for 10 cents. And that is the ChargePoint 50-cent strike for this coming Friday, April 25th. We're currently above it, so that's an in-the-money call, so that's risky. But, that's like saying, well, if I was going to have a stop loss at 50 cents, I might as well sell a covered call that would put my effective sell at 60 cents, which is above the current price. And then that would also serve as kind of a stop loss for 100 shares at 50 cents. But I get 60 cents per each of those shares, considering that premium for that limit sell 10 cents. And then if it does continue to go lower, then I could maybe, don't want to do that. maybe I could, sell or maybe roll the contract to a later date, or just let it close below 50 cents or let it get assigned, that'd be fine. But if it then goes up, then I could either, which would be more appealing, if it goes up, I could then roll that covered call into the following week, or I could buy more with the same strike. And then that premium would be, let's say, if it goes up to 70 cents, and I'm okay with selling 50 shares at 67 or 100 shares at 69, I could then put my limit for that premium, sell it at 19 cents or 20 cents. And then I would be effectively selling 100 shares at 69 or 70 cents. So that's kind of my strategy. I want to be getting out of ChargePoint just to be kind of consolidating my portfolio, because I think that they're going to need to do a reverse split, and I think it's just going to bleed, and I think that's just opportunity cost, and that's all that we've seen with this. If you want to be a long-term investor in it, maybe. It's a maybe, though. It's not a yes. It's not a yes seems very likely. It could continue to bleed, and it could just take up a lot of time. And I think that actually in 2026, maybe we've started the bear market, but I think that Bitcoin's going to continue up this year. I think that the stock market maybe hits all-time highs again, new all-time highs. Maybe it doesn't, but I don't think we're really going to start to see it roll over until next year is kind of my view. But maybe we're seeing that happening now, and maybe I'm wrong. And maybe we see that happening now, and then we just continue to new all-time highs next year. And maybe the cycle's changed for Bitcoin, and it's no longer a 4-year cycle, and it's just kind of been extended because we now have a Bitcoin president, all that. Anyways, you don't care about Bitcoin, you care about ChargePoint. But like kind of, my thought process on selling the 50-cent covered call comes from looking over at Max Pain here. So I've got it at Unity Software. So I'm just going to type in ChargePoint. So ChargePoint for this past Friday, on the Thursday on the 17th, Max Pain was $1. We closed well below that, so that seems pretty bearish to me. And then the upcoming 2 Fridays, we got a Max Pain of 50 cents. And so that's why I'm kind of comfortable selling, a covered call at 50 cents, because maybe we go below 50 cents. And so, yeah, I think that's quite the possibility. And I think that, by June, there's probably going to be a vote or an announcement on the reverse split. And I think that will be happening by August 19th. So I think that generally this is just going to be a bleeder. Not only, we got this purple downtrend that was support. Got bounces over here. A little bit of a bounce here, but then we broke below it. Then we got rejected from it. Now that's resistance. Rejected from it again. Now that's resistance. So we're below that purple downtrend. We're also below this green uptrend, which is based on the low from February 25th and the low from March 4th. We got, a little bit of a test of it, but then broke below, got rejected here, rejected again, rejected again. We got a lot of levels of resistance around, 67 cents. That yellow line going across here, that was the low from February 11th. That was, served as resistance here, but then served as a little bit of support before we broke below it, got rejected. Now, so we got like 3 lines of resistance, sub 70 cents. And we've got an impending reverse split. And following reverse splits, there tends to be massive bleeds. So I think that this is just an opportunity cost as of right now. If we do look, though, we do see lower lows in the stock price, lower lows in the stock price. We do see higher lows here. That's bullish divergence, but we still got a breakdown, but then still higher lows, still bullish divergence there. But we are seeing, the MACD was very slightly red here, very slightly green here, might be rolling over to be red again, and then maybe we break below 50 cents. So I think that this is probably going to be bumping into resistance around 70 at the highest it could get to, but maybe some stuff comes out that this gets to be kind of bullish. I don't know, but I think that this is pretty risky as far as, opportunity costs. I think that there's going to be better opportunities in other stocks. Tesla is one of them if you want to be along in the EV space, the charging network space. So yeah, hopefully that was helpful. I'm sorry it's not, I don't have the best outlook in it, but I think that, I didn't think this would happen. I thought this would be going up to 250. But we've just, and even like I talk about these trend lines that we've broken below. What about this yellow one here? That was support here, but then we broke below it and got rejected again. This orange line, that was support here, but we consolidated around there, got rejected from it. This gap, that might not get filled. And then this, was head and shoulders, it looks like. And we definitely broke below that, got rejected from it. So there are just a lot of levels that seem like they're going to be acting as resistance to the upside. 169 would be that gap fill, I guess. That was from September 4th. The close was 169. That's going to be resistance now. So yeah, I'm sorry, I'm not the most bullish on ChargePoint moving forward. And so I'm trimming my position, trying to, rather than ripping off the Band-Aid, I'm peeling it off slowly. But yeah, those are just my thoughts. And I've been streaming now for over 3 hours. I need to make some clips from this to release some videos, and I need to eat some food. So I'm going to throw this up here. Thank you so much for hanging out, for the requests, and putting up with my long tangents on these stocks. But hopefully they're pretty valuable. And if you've not already, please make sure you like the stream, make sure you like the videos. Always share your thoughts, whether in the live chat or in the comments down below. And if I don't respond to the chat, it might just be because I have it hidden so I could focus. But then I will always have it opened up towards the end. But yeah, I hope you guys have a great rest of your Saturday. I will probably have the Unity clip and the USAR clips out shortly, and then I'll try to get a Rivian video out later today. Maybe I'll do AMC, but somebody was requesting Rivian earlier in the week, and so I'd like to get that video out for them. But I am going to be taking off to eat some food and put out this clip.